Dear members, very good evening, namaste, a warm welcome to all of you to this today's study circle meeting on the new labour code. Today we have with us C. Amaranath Ambati sir to develop upon the subject new labour code. I request Chairman of Bangalore branch C. Madhur M. Harlalka sir to kindly escort the speaker onto dais. And welcome him with a floral bouquet. Thank you, Chairman sir. I have privilege in introducing as speakers C. Amaranath Ambati sir. He is a chartered accountant with over 20 years of experience in the field of NRI, HNI taxation, international taxation and labour laws. KPMG Global Services, where he worked on US tax returns and related compliances for expatriates. Prior to starting the firm, Amaranath worked in the international tax practice in Deloitte, Bangalore. His expertise includes various facets of international taxation like expatriates, social securities, e-shops, provident fund, salary structure, labour code, etc. He was an active member of team which makes industry representation to the Ministry of Labour and Employment through NASSCOM in the matter concerning social security and PF litigations. In his current role, he has assisted many corporate in compliances and advisory services related to Provident Fund, including PF Trust and ESI. International workers compliances from PF representative, labour law compliances arising on account of merger, demerger, etc. He has also advised clients on matters related to impact analysis and salary structuring related to new labour code, etc. With this brief introduction, I present before you CA Amaranath sir. Over to you, sir.
Good evening, everyone. It's already we have lost around 15 minutes. So without any further delay, let us start today's session, that is Labour Codes 2025. So what is the objective of these new Labour Codes? You meet November 2025. So Labour Codes have been the matter of importance for central government perspective for past couple of years. But finally, it saw its light on 21st November. When you look at the Code on Wages, it was enacted in 2019 and Code of Social Security maybe around 2021. So it received the presidential assent as well, but only the notification was pending. So finally, on 21st November, government went ahead and made these all the four labour codes effective in one shot. So what is the objective of these labour codes? What is the need for the existing labour laws to get changed? One is amalgamation. As you may be aware, there are 29 labour acts which are getting subsumed into these four labour codes. So instead of 29 acts, now we will see only these four labour codes. And this government, when you look at the past 1 decade of measures or the initiatives taken by this government, and simplicity or ease of doing business, whatever you call it as, is one of the most important parameters. So considering that the 29 codes or 29 acts have been amalgamated into these four codes, and then again simplicity, the language has been completely changed. So it is in a normal language where a layman can understand these codes, and then rationalizing the provisions. So there are many provisions which have been decriminalized in these new labour codes. So when you look at the existing PF Act or ESI Act, for each and everything we will see an imprisonment clause. However, there are many provisions which are being decriminalized and only a fine or penalty has been levied under these new codes. So then facilitate ease of compliance. There is one registration across all these labour codes across India. There is one pan-India registration is enough to comply with these labour codes. But today when you see, when a new company is incorporated, there is a PF registration, PT registration, ESI registration. All these are separate registrations. But with these new labour codes, the government has implemented across pan India only one registration, that is ease of compliance, and there are many registers and forms also has been dispensed with. We will see to certain extent in today's discussion, so how it is being simplified. Then transparency is another thing. Then provide uniformity of definitions. Definitions has been a nightmare to any consultant. If you see today's labor acts, PF has a separate definition for wages, which is basic salary, DNS allowance, retaining allowance, value of food concessions, these things. Then ESI, when you see, it is a gross salary. Bonus has its own definition. Again, gradually, it's only basic salary. But with these codes, all these 4 acts, whatever I mentioned now, has uniform definition. So when you look at the codes, I mean, if you understand that one definition, it can be applied across these 29 codes. However, there are exceptions, very limited exceptions, I would say. But otherwise, more or less, the wage code definition remains same across all these 4 codes. So current status, it is already notified as on 21st November 2025. The codes are already in effect, but the schemes and rules are yet to be notified. So, I mean, what is the today's status from a technical perspective? Are these codes are in effect or not? So, when you look at the substantive provisions of law, the codes are in effect. The definition of wages is already in effect as of today. But when you look at the procedural aspect, definitely we need to wait for the rules to come. So, rules are awaited. So, from substantive provisions of the law perspective, if you see the codes are in effect, but from rules perspective, it is not in effect. When you look at the Labour Ministry's press release, as on 21st November, when these codes were notified, they have clearly mentioned that from all procedural aspects perspective, the acts which are prevailing as of today will continue till the rules are out. So, from a procedural point of view, from a filing of PF returns or a ESI returns, whether my contribution will be as per the new code or as per the old, the existing PF Act, it is the existing PF and the ESI Act are going to continue till the rules are out. Then salient features of these codes, when you see, it is each code has subsumed several existing labour acts. So totally 29 labour acts have been subsumed by these 4 codes. So on new or uniform definition, we will see the very important definition of wages, how it is being modified in these codes. So another important aspect is recognition for gig or platform workers. Gig worker should not be understood as a freelancer. Here gig worker means the people who work for these aggregators, could be a cab driver or auto driver or delivery agents. So these are the gig or platform workers. So for the first time, the government has recognized them as a formal workers, and there has been a separate contribution which has been defined under the Social Security Code. So in a way, it is a very welcome move where there has been a social security provided to these workers as well. But there is no formal employment arrangement when you see whether it is a delivery agent. I mean, from with the service provider point of view, there is no formal employment with him. There is no employer-employee relationship. But still, the code recognizes them in certain way and makes mandatory social security contributions. Then period of limitation is introduced. When you look at the existing PF Act, there is no limitation period. PF authorities can go back 5 years or 10 years or 15 years and say that there is a liability and you need to pay along with interest and penalty. However, those anomalies have been removed, and to the extent possible, wherever the period of limitation has been introduced, and that limitation period is 5 years. Generally, across all these 4 codes, 5 years limitation period has been introduced. So what are these new codes? So code on wages, code on social security, industrial relations code, then occupational safety, health and working conditions code. So industrial relations code is known as IR code, and the occupational safety, health and working conditions code is OSH code. So from a service sector perspective, when you see, mostly the code on wages and code on social security is widely applicable. However, the IR code and OSH code, it's not meant only for manufacturing units or factories. There are many provisions in these codes as well which are equally applicable to even service sector. So it is very important to understand some of the aspects of this IR code and OSH code as well. So as we saw, there is a uniform definition of wages. So what is this definition? How it is different from today's PF Act wage definition or ESI Act wage definition? So, I mean, when you look at the code, the definition of wages, it starts with wages includes everything. All remuneration, whatever you pay to the employee or worker is wages. However, the code also defines there are certain inclusions and certain exclusions from the wage definition. So what are these inclusions? There's basic, DA, which is dearness allowance, and retaining allowance. These three are inclusions from wage definition perspective. So when you come to exclusion, code provides a list of exclusions. Of course, we will discuss that as well in the coming slide. However, there is a caveat which is put in the code that these exclusions cannot exceed 50% of the total wages. So if this is exceeding 50% of the total wages, the excess of 50% need to be added back to the wages to arrive at the wage definition. Then what about the benefits in kind? So benefits in kind to the extent of 15% of the total wages also need to be considered as wages for the purpose of these codes. So this is very interesting. So what is the exclusions which have been defined under the code? So the first one is bonus payable under any law which does not form part of the remuneration payable under the terms of employment contract. So there are two conditions to be satisfied to exclude bonus from wage definition. It has to be paid under any law, which is bonus act. Just for an example, if you take bonus act, if you are paying bonus under the bonus act, then it will not form part of the employment, provided it is not forming part of the employment contract. Which means to say that in your offer letter or appointment letter, if you mention that CTC you have arrived at by including bonus as per bonus act, then it is not an exclusion item. So basically their intention is to, if you are paying bonus over and above CTC and that too as per the bonus act, then it is excluded item. So value of house accommodation provided under a government order. So this is not applicable to private sector. However, if there is any government order for a government institution or even certain PSUs, for CXOs of the PSUs, also there could be a house accommodation benefit which is provided under the government order. So that can be excluded. And the third one is employer contribution to provident fund is an excluded item. Then employer contribution to pension fund. If it is, example is NPS. If it is national pension system and if there is a salary structure, there is an NPS component and employer contribution to NPS component is also excluded. And also interest thereon, the PF interest and the NPS accretion whatever comes in, even that is excluded from wage definition. Then conveyance allowance is excluded and any travelling concession which is leave travel allowance is also excluded from wages. Amount paid to defray special expenses, let's park it aside. We will come back to amount paid to defray special expenses. What is the meaning of this and what is the code, how does the codes address this special expenses? Then comes house rent allowance, which is quite common in the industry. So every offer letter when you see there will be a house rent allowance, that is excluded. Then amount payable under any court order. If there is any dispute between employer and employee and if there is a court order to award something to the employee, even that needs to be excluded from wages. Then overtime allowance, commission also need to be excluded. Then gratuity, if the employee is eligible for gratuity and then the company is paying gratuity amount, even that is excluded. Then retrenchment compensation is also excluded. As I already mentioned, there is a caveat in the labor codes which says that all the exclusions put together cannot exceed 50% of the total wages. And the exclusions, you need not see the entire list of exclusions, it's only from A to I, which is bonus to commission only need to be considered, and then see whether the total amount is exceeding 50% of wages. Then in that case, restrict the exclusion to 50% and ignore the balance amount. Then again, benefits in kind to the extent of 15% of total wages also need to be added as wages. So coming back to this amount paid to defray special expenses. So what is special expenses? The codes, none of the codes define these special expenses. So you have to necessarily look at when the existing laws are not defined, obviously we'll go back to the earlier laws to understand the definition. So in the existing laws, whether PF, ESI, where is this term has been used, it is ESI Act uses the exact term amount paid to defray special expenses. However, ESI Act also does not define this what is special expense. So we have to necessarily depend on the judicial precedents for this purpose. So to understand special expenses, when I look into the some of the court decisions, there are a couple of decisions. So in one decision, the High Court had held that if a transport company is paying any driver bata to the driver to take care of his food expenses during his night shift, can be considered as a special expense. Similarly, in a factory which has uniform as a policy, and the workers, if they have to wear uniform, the maintenance expenses, whatever is given by the factory to the workers, can also be considered as special expenses. So special allowance, can I treat it as a special expense? Definitely no. Special allowance is a fixed amount which is not paid for a specific purpose. So it cannot be considered as a special expense. So looking at those court decisions, what we can infer is, to consider it as a special expense, it has to be necessarily paid for a specific purpose, and the industry or the work or the nature of employment need to justify that payment. So considering this, special allowance cannot be considered as special allowance, special expense. Special allowance cannot be considered as special expense for the purpose of this wage definition under the codes. So when you look at the impact of this definition, so how it is impacting actually in a company. What is getting impacted? Is PF getting impacted, gratuity getting impacted, ESI getting impacted, or leave encashment is getting impacted? So mostly all these may get impacted. So let us understand this through an example. So for the simplicity sake, I have taken the CTC as 10 lakhs. Then basic 40% of CTC, which comes to 4 lakh rupees. Then HRA 40% of basic, which is 40% of 4 lakhs, which is 1,60,000. Then LTC I have taken 20% of basic, which is 80,000. Then employer contribution to PF 12% of basic, so 48,000. Then gratuity 4.81% of basic, which is 19,240. Then the balancing figure is special allowance. So the total is coming to 10 lakhs. When you look at the existing Gratuity Act, what is eligible for gratuity? It's only the basic side. So company has to pay gratuity only on the basic. So when you look at the first column, here I have taken an employee who has served for 7 years. So for 7 years, what is the gratuity? What will be the gratuity payout for him? Wages for gratuity purposes 4 lakhs, and if you look at the per month wages, it is 33,333. So gratuity, when you come to for 7 years, 33,333 divided by 15 by 26 formula if you apply, and if you multiply that by 7, then you will get 1,34,615. Similarly, leave encashment, assuming the company has a policy to pay only on the basic salary, it comes to 33,333, assuming there is a 30 days of leave. So what's going to happen under the new wage code? So what is excluded? So we looked at the exclusions here. So let us apply this exclusion list to the components which are provided here. So one is HRA. HRA is excluded. Visa, house rent allowance is excluded. Then LTA, leave travel concession, again it is excluded. It is coming under conveyance allowance or any traveling concession. So that's also excluded. Employer contribution to PF is an excluded item. So that is excluded. Then gratuity is also an excluded. So these 4 components are excluded items. Special allowance, we understood it as not a special expense. So it is cannot be considered as an excluded item. So when you include basic and special allowance, his total wages for gratuity purposes is becoming 6,92,760. Applying the same formula of 15 by 26, taking the monthly wage which is 57,730, his gratuity payout comes to 2,33,140. Similarly, leave encashment 57,730. So you can understand the impact of it. The incremental benefits is going up by 73% in this example. I am not saying that in every case this will be like 70%, 75%. I have seen cases where there is an impact to the extent of only 30% as well. But definitely the benefits are going up. So it has impact on the bottom line of the company as well. because gratuity provisioning need to be changed, leave encashment provisioning need to be changed, actual valuations need to be based on the new wage definition. So all these are going to impact the bottom line of the company. So this is very important to look at this point in time. So apply the new wage definition and see the impact at the organization level, and please keep the stakeholders informed about this. The finance person or a HR person may understand this definition, but the top management CXO level may not understand this impact. Unless this has been worked out employee wise applying this new definition, the total impact will not be seen. At the organizational level, the certain companies, the impact is running into hundreds of crores, not even crores, hundreds of crores because of this gratuity and leave encashment. So it is the need of the hour. Please look at your clients' salary structures also and make sure that you are informing them this. There is a huge impact on their bottom lines because of the new code, new wage definition. So then what are, is it the wage definition, is it so straightforward? No, definitely no. There are a lot of gray areas in this, in the new wage definition, because when you look at the benefits in kind, it says 15% of the value of the wages need to be considered for the purpose of wage code as wages. But how will you arrive at the value of these benefits in kind? It could be a house accommodation, or a telephone has been provided, and an internet connection has been provided, or a motor car has been provided under car lease scheme. Many companies provide motor cars under the car lease scheme. How will you value? Is it as per the income tax rules? Can I consider income tax rules? No, there is no clarity as of now. So it is expected that, that clarity should come in the rules or scheme. And the other thing is, what about the one-time payment, bonus, or performance pay, or incentive, retention bonus, joining bonus, whether that needs to be considered as wages? There also there is no clarity. I had an occasion to listen to Mr. Alok Mishra, Secretary to Ministry of Labour and Employment. When this question was raised with him, he categorically said that their intention is not to include the one-time payouts like bonus and incentive or performance pay. And that's the reason he also mentioned like overtime allowance or commission or gratuity also has been excluded. So there will be a clarification on this. A guidance will be provided along with illustrations to arrive at the wages. So we are hoping that that will be coming shortly, and in couple of months' time everything will get settled, or at least the anomalies with respect to wage definition will be removed. So then how do we mitigate this impact? Yeah, of course, compensation structuring, looking at what components you can add or delete. And when you look at the comp structuring, when you look at the Income Tax Act, with the name of simplification, all these conveyance, medical allowance, all these have been removed, and many companies changed their salary structure by removing these conveyance allowance or LTA. Under new regime, no benefits will be provided, so companies also thought that it will be a good idea to remove this and make the structure simple. But now again, it's a time to relook at it, because conveyance, LTA, everything, HR, everything is forming part of exclusions. So these components may need to be included to see the efficiency or to mitigate the liabilities. So as I said, there is no straight answer for this. So it has to be, impact analysis has to be done, and then see the total impact. So is there any bar on compensation restructuring? When you look at the existing PF Act, so there's a specific section which says that the employer cannot restructure the salary with an intention to reduce the PF contributions or PF benefit. So is there any similar provision in the labor codes? Yes, section 124 of the Social Security Code has similar provisions. It says that the compensation structuring or the compensation cannot be changed with an intention to reduce the benefits under this code. So none of these benefits, when you're re-looking at the compensation structure or the impact analysis when you're working out, please ensure that the benefits, whatever has been company is giving as of today, that should not be reduced. And there is one understanding, when these codes are released, there is one understanding of the one news item which came in the social media that the basic has to be 50%. Where does it say that? We saw the wage definition now. Wages includes all remuneration, and there is a list of exclusions, and exclusions cannot exceed 50% is what it says. But where is that interpretation coming that the basic has to be 50%? Or another view is, once I make my basic as 50%, then I am good. I am taken care from the wage code perspective. My liabilities may go only to the extent of that 10%. That's not the case. So if you are making the basic as 50%, say assume that in this case itself, your 40% is becoming 50%, the basic. So what is the impact here? Of course, special allowance is going to be there. You need to add special allowance also and then see the total impact. It is just not that only the basic needs to be considered, even though your basic is 50%. So special allowance is not an excluded item. It is very much included item. So you must consider even the special allowance. So if I increase the basic, what are the implications of it? What is the impact of increasing the basic? So increase in PF contributions, if the company is paying it on the basic amount, so there will be a cascading impact on the PF contributions. Then the company may say that, okay, increase in PF contributions may not impact me because both employer contribution and employee contribution is part of CTC. So it is fine to increase that. But what about admin charges on PF? 0.5% of the total wages is admin charges on PF. So which has to be borne by the employer. It cannot be recovered from the employee. So this 0.5% of admin charges is not on contribution, it's on wages. So 10% increase in the basic may significantly increase the total wages of an organization, and 0.5% of the total wages also may become very significant. Then increase in NPS contributions, again the result of this is reducing, there will be a reduction in the take home pay of the employee. So all this needs to be considered. I am not saying that 50% is a bad idea, you cannot increase it to 50%, or 40% is a correct one, or 30% it cannot be. So I am not saying that. So this is an impact analysis of the restructuring. We cannot decide based on a thumb rule saying that 50% is fine or anything like that. So it depends on lot of other factors. So what more components you can introduce and what is the nature of industry. So all these things need to be considered, and this need to be seen at a high level, at the overall level of an organization, and then decide the way forward. So then let us dwell upon into the specific codes. So the first is the code on wages. So legislation subsumed under this code is the Payment of Wages Act 1936, the Minimum Wages Act 1948, Payment of Bonus Act 1965, and the Equal Remuneration Act. So Bonus Act is an exception, though it is a benefit, it is being included under code on wages. So it is not a social security item, so it is not coming under the social security code, rather it is coming under the code on wages. So let us see the salient features of these codes. Let's try to understand that to a certain extent. So applicability of code on wages, that is 2019, it is applies to all establishments now, currently only to specified industries. The code on wages, when you look into the Payment of Wages Act 1936, that's applicable only to certain industries, but code on wages now it is applicable to all establishments. Then wages definition for the purpose of code on wages is not the wage definition what we saw now. It includes total salary. As I mentioned in the beginning itself, there are certain exceptions because code on wages is talking about the payment of wages and many other things. So there if they say that the wages need to be considered as per the wage definition, then it does not make sense that the employee won't get 100% salary itself. So for this purpose, the wages generally includes all remuneration. Then timelines for payment of wages has been defined under this code. So daily, if it is a daily wage period, at the end of the shift, the wages have to be paid to the employees. But if it is a weekly wage period, on last working day of the week, the wages have to be disbursed. And if it is a fortnightly wage period, by end of the second day after expiry of the 15 days. And then monthly wage period by 7th day of the succeeding month. So generally what we see is, very rarely I have seen taking 7 days or more than 7 days. But as per the codes now, the maximum period you can stretch is only 7 days. Within 7th of the subsequent month, the wages have to be disbursed. Then another important point to be noted here is wage period cannot exceed a month. So what's going to happen to the new joinee? When you look at the practical situation as of today, in the case of new joinees, especially who have joined after the payroll cutoff period, the salary will be processed in the subsequent month wages. So in that case, is it exceeding 1 month? Yes, it is exceeding 1 month. It is a violation of the code, violation of that provision. So what is the way forward? Again, these have been represented through representations. These have been already informed to the ministry. So we are expecting that maybe rules or in a notification that may relax in the case of new joiners. Full and final settlement has to happen within 2 working days. So nowadays, when you look into the company policies, it takes 30 days. Basically, if a person is leaving this month, his salary will get processed only in the subsequent month's pay. But those policies have to be changed. The code specifically says that full and final settlement has to happen within 2 working days. So that means what happens to gratuity? Do I need to pay gratuity also within these 2 working days? No, for gratuity especially they have provided 30 days timeline. Gratuity can be paid within 30 days from the last day of working. But otherwise, leave encashment, when you see, that is, there is no separate exclusion for leave encashment. Leave encashment may need to be paid within 2 working days. Then payment of bonus act. So payment of bonus act, more or less it is the same. The existing provisions have been retained in the code. So this is applicable to establishments employing 20 or more persons. So maximum bonus also has been remained the same, as 8.33% is the minimum bonus and 20% is the maximum bonus. So wage ceiling, wage threshold of existing 21,000, it's not mentioned in the code. So the circulars are the rules may specify the wage ceiling. So as of now, the wage ceiling is still awaited for the bonus purposes. So then comes the contract workers. So principal employers are liable to all the benefits for the contract workers if the contractor has defaulted in paying any of these benefits. So in a way, the existing laws are also more or less the same. So principal employers are liable for those non-compliances. So even in the courts, principal employers' liability has been retained as is. The code on wages also gives a list of deductions which are permitted under the codes. So the deductions from your pay slip, it cannot be beyond these deductions. One is fines imposed by employer for any violation which has been done by the employee. If there is any policy of putting a fine on the employee, that can be deducted. Then deductions from absence or from duty, which is LOP, loss on pay. Then deduction towards rent-free accommodation provided by the employer. So if there is any recovery has been done towards the perquisite or the benefit provided, even that can be deducted. Deduction for amenities and services supplied by employer, and such deduction cannot exceed the value of such amenities and services. There cannot be any margin is what it is saying. So if there are any benefits provided by employer and if there is a specific deduction towards that, that's also permitted. So recovery of advance of every kind. If there is a salary advance and if there is any festival advance, so something like that, that also can be recovered. Recovery towards any loans and interest thereon. Then income tax and any other statutory levies. So deductions for subscriptions and repayment of advance from PF, pension funds and all that. Then membership fee, deduction for damage or loss of goods. Then contributions to PM National Relief Fund. But what is the catch here? Again, there is a proviso which says that the total deductions for a wage period, specific wage period, assuming it is 1 month, cannot exceed 50% of the wages for the particular wage period. So if there is 100 as wages and if the deductions are exceeding 50%, then you cannot make the deduction 50. You need to restrict the deduction to 50 and carry out the balance to the subsequent months as a deduction. Because see, when you look at this, the list of deductions, it covers advance as well as the loan. So the loan, maybe the company policies may have a different policy for recovery of loan. It could be a 1 lakh loan which needs to be recovered within 6 months period. And it could be a salary advance which needs to be recovered within 3 months. So considering all this, the total deductions may exceed 50% because this also includes income tax. So including income tax, it cannot be exceeding 50%. So there is a very high chances that especially the companies which have loan to employees or salary advances may get impacted with this clause. So they need to relook at their loan policy or salary advance policy to ensure that this 50% is not met. I am not saying that that is prohibited. Only thing is from a logistics perspective, the company has to build in processes that excess of deductions will be carried over, and the softwares have to track that excess and accordingly deduct from the salaries. Then comes the overtime wages. So code on wages also provides for overtime wages. Overtime wages cannot be less than twice the normal rate of wages. Of course, it defines the working hours and all that. The overtime has to be paid for the hours which has been done beyond the normal working hours. So when you look at the code on wages, it has a specific provision on overtime wages. When you look at the OSH code, that is Occupational Safety, Health and Working Conditions code, also deals with the overtime wages. But OSH code talks about the overtime wages only in the case of workers, whereas code on wages provides for employees. So we will see this difference, what is the difference between employee and worker and how that is being seen under the codes in the further slides. But for the time being, code on wages addresses overtime wages for employees. So what is the today's scenario? Many of the software companies, service sector won't pay this overtime wages. Many times, depending on the project requirements and all that, many employees do work overtime. So again, the overtime wage impact need to be seen at the company level and see what policies need to be changed with respect to this. Then comes code on social security. Code on social security has subsumed 9 codes. So the important ones are ESI, that is Employee State Insurance, then Provident Fund, which is PF, then Maternity Benefit Act, then Payment of Gratuity Act. These are generally what we see in the companies. These 4 codes have been subsumed under code on social security. So what is the impact of this at a high level? Let us understand, because the social security code itself runs into almost 100 pages. So we won't be able to deal with all the provisions of the code in today's discussion. So let us see the main aspects of these codes. So Provident Funds applies to all establishments where 20 or more employees are employed, which is same as of today. So then the contributions are capped at 10% or 12% depending on the industry and will be notified by the appropriate government. So the current 12% may not apply to all the industries or all the companies. It may get reduced to 10% as well under the new codes. The threshold on wages is expected to be introduced through the scheme. So currently it is not provided, which is 15,000, which is there in the PF Act, may continue under the codes as well as the expectation. But if it is 15,000, then if the company is paying 1,800 rupees as a PF contribution or on the basic, that is 12% on the basic, whichever is higher, then not much impact may be seen under the codes. Because if the threshold is retained at 15,000, your wage definition may come to around 30,000 or 40,000. But if the 15,000 threshold is retained, then it is not mandatory for you to pay beyond 15,000. So on the basic, you are allowed to pay 12% of basic is also fine. So in that way, I do not see much impact on from the PF perspective. Then comes ESI, so applies to all establishments where 10 or more employees are employed, which is very much similar to as of today. So contributions and threshold on wages again are expected. See, at least in the PF legislation, the contributions are defined 10 or 12%. But for ESI purposes, the contributions are also not defined. It is going to be notified separately. And even the threshold is not defined for ESI, which is 21,000 as of now. So employer contributions, the total employer contributions, when you see, may go up. Why I am saying this? You may ask, like, the wage definition compared to ESI as of today is reduced, because as of today ESI has to be paid on the total wages, gross salary, more or less it's the gross salary. But wage code has specific exclusions. Up to 50% I can have exclusions. But how is the employer contribution is going to impact in the case of ESI? So see, here what happens is the number of employees who are getting covered under the ESI may go up under the codes. How is it going to happen? See, today's example, today's salary of an employee could be 25,000. So you are saying that his salary is more than 21,000, so he is not coming under the ESI Act. But when you apply the wage definition, wage code definition, after removing exclusions, his salary may become 20,000 or 19,000. So which is less than 21,000. So the number of employees who may get covered under this ESI may go up with this new amendment, provided, the 21,000 is written. We don't know whether it will be 21,000 or 25,000. So gratuity again applies to all establishments where 10 or more employees are employed. It's the same as of today. So except the definition of wages, all other provisions as currently existing will hold good as well. So this 20 lakh cap is not yet being notified. So that again will be notified separately under the codes. So again, as we saw, since wage definition has been significantly widened for the purpose of gratuity, the impact is more for the companies from gratuity perspective. Then maternity benefit also, more or less the same provisions are retained. So it is 26 weeks paid leave is allowed, which is as per the existing Maternity Act as well as in the new codes, and applies to establishments who are where there is more than 10 or more employees are employed. So then comes the OSH code, Occupational Safety, Health and Working Conditions code. As the name itself indicates, the many of the provisions which are under this code is from a safety, health and working conditions perspective. So the acts which are being subsumed under this code are very high. So your Factories Act, Contract Labour, Interstate Migrant, all these comes subsumed under this OSH code. So then Industrial Relations Code, codes subsumed are Industrial Disputes Act and Industrial Employment Standing Orders Act and the Trade Unions Act. When you see the current provision, the Karnataka government, the rules, when you see, there are standing orders. The service sector, especially IT and ITES industry, has been excluded from application of standing orders. But we really need to see under the codes whether those exclusions will be retained or not. So this is another area for a service sector which need to be closely watched out and see what policy changes need to be brought out. So there are certain other provisions. So it is employee versus worker. As I mentioned, OSH code provides for overtime pay for worker, whereas the code on wages provides overtime pay for employee. So what is the difference between employee and worker? Many provisions in the OSH code are from a worker perspective, not from employee perspective. So employee generally covers everyone. So irrespective of whatever role he is in, or a level or designation or nature of work or whatever you call it as, is an employee. But worker has a specific definition. So worker means any person employed in any industry. So what is the meaning of industry? Industry is also defined separately. To do any manual, clerical, skilled, unskilled, supervisory, but does not include any person in a supervisory capacity drawing wages in excess of 18,000 per month. Okay, so here for an employee not to consider him as a worker, two conditions need to be met. One is his salary should be more than 18,000 rupees, plus he should be in a supervisory capacity. So managers or quality reviewers, QC, so these people will not come under the worker category. But as a fresher employee, even if his wages are more than 18,000, he may still come under the category of worker. So what are the impacted areas which are going to be applied only in the case of worker is leave encashment. The codes provides leave encashment benefit only in the case of worker. Then contract labor regulations are again in the case of workers only. Then retrenchment and layoff provisions are also in the case of workers. Then all industrial relations matters are also in the case of workers. So what is the provisions with respect to leave encashment under these codes? So it applies to worker, as I mentioned, not to an employee as per the code, and only workers are covered under the leave encashment benefit. So worker visa, who is a worker, but what is an industry? Industry means any systematic activity, so there is a definition for it. The last part is very important. For the production, supply or distribution of goods or services. So even service sector is also covered as industry. So whatever service it is, whether it is IT, ITES or the CA firm having more than the threshold, all these comes under industry only. So these provisions are equally applicable to all these sectors. So provides for carryover of unused leaves up to 30 days. Then leave in excess of 30 days can be encashed, and leave balance at the time of termination or resignation also has to be encashed up to 30 days. So now if you see in the industry, especially service sector, what I have seen, they will have a leave policies which says that there is no encashment. It is mandatory for the employees to go on leave from a work-life balance perspective or whatever the objective is. But those policies need to be revisited with respect to these codes, because codes does not provide any of such provisions. So all it says is 30 days an employee can carry over, 30 days leave. So it is a right of the worker to carry over these leaves. So there cannot be a mandate from the employer side that you have to mandatorily avail the leave, or there cannot be any encashment. Then what is going to happen to the existing shops and establishments act? Because when you look at the current legislations, none of these central acts provides for leave encashment. It is the Shops and Establishment Act of the state which provides for this leave encashment. So now whether the OSH code will override shops and establishment, or shops and establishment will override OSH code. So based on the interpretations and rules of interpretations and the jurisprudence, when you look into, central codes or central acts will override state acts. So considering that, even if I presume that the OSH code will override the shops and establishment code, but OSH code is addressing leave encashment benefit only to worker. So do you say that then for employee I need not provide the leave encashment benefit, because shops and establishment is not applicable to me, it's only OSH code is applicable, this is the central code, so I need not provide leave encashment benefit to employees, only workers are covered. If that is the case, then what is going to happen? Within the organization there is a discrimination with respect to benefits. So these are the practical challenges, and more clarity is awaited in these areas. These are very grey areas, I would say. So even if the companies wants to implement these things, they are stuck at these kind of things. So we are awaiting further clarifications again on these things. We really need to wait and watch to what extent or how these practical challenges will be addressed by the government. So certain other provisions coming to duties of employer, maintain safe working environment and annual health checkup. There is a mandatory annual health checkup to be provided by the employer at a free of cost. This cost cannot be passed on to the employee. Of course, this is applicable to certain category of employees. One is if the company is a hazardous industry, manufacturing of any hazardous products or dealt with any hazardous products, then it is mandatory for the annual health checkup which needs to be provided by the employer. So other industries it is not specifically provided, but when you look at the draft rules which were published a couple of years back, it says that if an employee is 45 years and above, then for all the employees, the employer has to provide mandatory health checkup at a free of cost. So assuming that 45 years will be retained in the new rules as well. So then if it is 45 years old, then employer has to provide the mandatory health checkup without recovering any cost towards it. There is an additional cost to the employer. Then duties of employees to report unsafe and unhealthy situations, then to bring to the notice of the inspector. So it is the duty of the employee, if there is any unhealthy or unsafe situation, to bring it to the notice of the inspector. They can straight away go and complain to the labor inspector. Then employment of women has been permitted across 24 hours. However, with the consent of women employees, before 6 a.m. or even after 7 p.m. it is permitted, but the safety conditions need to be ensured. So coming to other aspects of the codes, there is another concept which is new, which has been introduced under the codes or recognized under the codes, is the fixed term employees. So we know permanent employees or full-time employees, part-time employees, but who are these fixed term employees? So fixed term employees are those employees who are hired for a specific period by the employer. At the time of hiring itself, you will say that you are hired only for a period of 6 months or 1 year. So you might be looking at the industry challenges as of today, that if there could be a sudden increase in the workload, so for a specific project which has been won by the company, there could be only for a specific period they may need these employees. So at that time they are free to hire the employees. However, the offer letter clearly has to specify that he is hiring for a fixed period. I mean, if that period extends, of course the employer can renew the contract and continue the terms of the employment. And another condition is, fixed term employees or fixed term workers are equally entitled to all the benefits which are available to permanent employees. These are not temporary staff. This cannot be considered as a temporary staff. So what the code has mentioned is, so whatever benefits you give to the permanent employees, all those benefits without any fail has to be given to the fixed term employees as well. So what happens to gratuity? Gratuity, then how do I pay to the fixed term employee? The code says that, so if a fixed term employee has served for a minimum period of 1 year, then he is eligible for gratuity. So, and in the case of permanent employees it is 5 years, but in the case of fixed term employees it is only 1 year. Then comes appointment letters. So there has been a new format which will be issued. I mean, draft rules, when you see, there was a separate format, and the code also prescribed, the rules also prescribe the contents of the appointment letters. So appointment letters mandatorily should include minimum details, that is Aadhaar number of the employee, then labor identification number of the establishment. So now labor identification number, it is not yet introduced, but once the rules are out, all employers have to mandatorily register for one number, which is labor registration number, labor identification number, and that needs to be reported in the appointment letters. Then UAN of the employee or ESIC number of the employee. Then this mandatory, I mean, appointment letters have to be issued to all the employees, and in the case of existing employees, it needs to be issued within 3 months from the date the code becomes effective. So within 3 months, the existing employees have to get the appointment letters. Then comes the contract workers. Again, there are certain provisions which deals with contract workers. So the provisions says that contract workers are prohibited to engage in the core activity. So what is a core activity? It's not defined. So as usual, the industry practice, if it is a core activity, I mean, in the case of a software industry, if it is a software development or the consulting industry, if it is a consulting work, that is considered as a core activity. But the codes say that in case of core activity, contract workers cannot be hired or cannot be employed. Of course, there are 3 exceptions to this. So let us see those exceptions. So the normal functioning is such that the activity is ordinarily done through contractor. So it is an industry practice that if that work has to be executed through a contractor, then you can hire the contractor. Say example, security guards or a housekeeping. It's across industry standard. Across industry, it is a standard practice to hire them as a contract worker. So those areas are permitted. Activities are such that they do not require full-time workers for the major portion of the working hours in a day or for longer periods. Then any sudden increase in the volume of work in the core activity which needs to be accomplished in a specified time. So only these are the 3 exceptions which have been provided. I mean, when you look at the industry perspective, of course these exceptions are there. You may conclude that, I mean, it is the normal industry practice to hire them, so I am fine with that, I will fall under this exception. Or there is a sudden increase in the volume of the work, so I got a new project, so I am permitted to hire contract workers. But if there is any question from the department, how do you substantiate these things? Can you share the work order or a contract or the new engagement letters with them? Because many companies will have NDAs and the client information cannot be shared with anyone. So these are the practical challenges. How will you substantiate this to the officer that you will fall under these exceptions and then you have hired the contract workers? That is one point which again need to be relooked into. I'm hoping that again the government may relax these provisions in the rules or through the notification. But there are a lot of practical challenges with respect to contract workers. So then there are a lot of policies and procedures as well which has been introduced by these codes. So one is appointment letters, where we saw that appointment letters have to be issued to mandatorily to all the employees, and there is a specific content, and the format also may issued by the government in the form of rules. So that is one thing. Then extra wages for overtime, it is OSH code as well as code on wages. OSH code covers workers and the code on wages covers employees. So records and registers, so maintenance of records and registers is being prescribed, and electronic maintenance of records and registers is permitted under the codes. Then wage slips have to be mandatorily issued to all the employees, pay slips. Then notice display, I mean the prominent features of the code or the provisions of these codes have to be displayed in the notice board of the company. Then other responsibilities include like timely payment of wages or contributions and these kind of things. So coming to offences and penalties. So when you look at offences and penalties, I am not getting into the details of this. So failure to pay or deposit employee contributions, when you look into the fine is 1 lakh and imprisonment between 1 to 3 years. For second and subsequent offence, imprisonment up to 2 years and fine of rupees 2 lakhs. So everywhere it is 50,000, 1 lakh, 2 lakhs, 3 lakhs only. But when you look at the existing labour laws, the penalties run to 55,000, 10,000, these kind of penalties. When you look into this, I mean you can understand that it has gone up by minimum 10 times the penalties or fines. This shows that how the government is looking into these provisions and how serious they are with respect to these codes in implementation. So violations will not be considered as with a lenient view. Definitely there is going to be a huge fines and penalties need to be paid wherever there is a non-compliance. So what is the way forward? I mean, as a CA, the labour laws may not be that relevant for me. Maybe I'm thinking that the labour laws are not that important or the labour codes are not that important. But as a statutory auditor, you have to ensure that the provision for gratuity or the provision for leave encashment has been done properly. Though you may rely on a actuarial valuation certificate, at least at a high level, you should be knowing that the wage definition has been changed and how is it impacting the financial statements and whether these provisions which have been created under the code are correct or not. So from a company perspective or from your client's perspective, what is what they need to look into as of today is compensation structure. We saw the impact analysis, how it is impacting the gratuity or leave encashment. So it is a need of the hour that the companies look at their compensation structure, do the impact analysis and then take it to the management, educate the management about the final impact on the financial statements. Then there are many grey areas. So how do you deal with those grey areas when it comes to compensation or the wage definition is another thing one has to look into. Then from policies and processes perspective also there are a lot of changes, like overtime wages is one. Many companies may not have overtime as of today. Then leave encashment for workers, if they are coming under the worker category, that is another area which the companies have to look into. Then normal working day, rest day, leave day, then policy on overtime wages, on leave encashment we already discussed. So these are the certain policies which need to be looked into. Then ERP system changes, as I said, the deduction from wages cannot exceed 50%, so that need to be carried over. Then categorization of workforce, whether a person is an employee or a worker, because worker is specifically benefited in the form of certain benefits like leave encashment, overtime, etc. So categorization of worker is another important thing which from an ERP system perspective needs to be looked into. Then review of contractors, contracts with the contract workers. If you have any contract workers, as I mentioned, it is the principal employer's liability to ensure that the contractor is aligned with the codes. So as your contractor looked into the wage definition properly and how he is doing the wages, how he is arriving at the wages, how he is structuring the salary, and whether he is being paid the contributions properly, whether it is a gratuity or leave encashment, whether he is discharging his responsibilities properly. Again, that's another task where an employer has to look into. So these are the main things from labor codes perspective. So that's all from my side for today. So if there are any specific questions, I can take them.
Sir, what will happen to the accumulated leave encashments? Because 30 days I am seeing it. For example, if I have 100 days, what will happen to that surplus?
So if the company is already allowing 100 days to carry over, so it is giving more benefits than what is prescribed under the codes. That is still allowed. If the company wants to have the benefits which are higher than prescribed under the codes, any wage code or act perspective, so they can still have it. When you look at the Gratuity Act, the existing limit is 20 lakhs, but there are certain companies which does not limit it to 20 lakhs. That is permitted. But you cannot have a leave policy which says that I will restrict it to only 15 days or 20 days. Or I won't allow you to carry over. Those kind of policies you can.
But whether the company can change the employment terms, saying that I'll cut down from 100 days to 30 days.
Yes, in my view it is possible. Yes.
What about the exemption of gratuity limit with the new code in the income tax?
No, Income Tax Act has not changed. And even in the courts, I mean, mostly it is, we don't know as of now whether they are going to retain the 20 lakhs or not. The notification is not yet come. But in the Income Tax Act, it is as per the Income Tax Act.
See, in the case of closure compensation,
What is the retrenchment compensation?
retrenchment compensation, in the
Mhm.
Income Tax Act it says ID Act,
Industrial dispute.
the section 10, I don't know,
Yeah,
the
yeah,
subsection.
yeah.
Whereas that if you are closing down now, you are giving another new,
Industrial
Industrial
code or OSH code. Yeah.
whether this is applicable or should we go for deduction of TDS because this section is not referred there.
So Industrial Disputes Act is no more. It has been subsumed under this code. So you have to read this code and then determine the liability.
That means it will be liable for tax, whatever the amount you are paying under the IR code.
No, you will go with the retrenchment compensation section which deals with section 10, subsection whatever.
Yeah, in that it says only the ID Act, but ID Act is subsumed.
Correct.
Whereas this is a new act. Since it is act is not referred in the exemption that is.
No, I think that view is a very stringent view, I would say. So because it is being subsumed under this code, you have to look at this code now and then apply that.
Applied to.
Apply that. Yeah. I think maybe in 2025 Income Tax Act they may also amend this
Amended.
thing to the by reference to this new code.
So the rules are not there. How should we go about December quarter for the listed company? Should we get the gratuity and re-encashment done?
Yeah.
Is the
So, yeah, that's a very good question. So, because as I said, the substantive provisions of the law are already in effect, and wage definition is one thing which is already in effect in a way. Because wage definition does not depend on the rules. It has its own definition and it is flowing from the code itself, and the code is in effect as of today. So what is going to my gratuity payouts? Whether do I need to recompute that based on the wage code, or can I restrict it to basic salary? And when you, as I already mentioned, the press release says that all the existing rules or the whatever the procedures will be applicable till they come out with the rules. Whether can you take that as a basis and then say that the gratuity I am going to pay only till on the basic salary? In my view, that's an aggressive position. So what I am advising, or what my view here is, so you pay out the gratuity as of today based on the basic salary. At the same time, you should be ready with the extra payout which may come in future, or once the rules are notified, then the balance payout can happen. Because as of today, even if I want to compute the gratuity as per the wage code, as I said, there is no clarity. There could be notice paid to the employee, bonus paid to the employee, or RSU or ESOPs may get vested in the name of the employee. So whether these need to be considered or not is still not clear. So I will discharge my liability as per the basic, but I will make a provision for the extra amount and be ready with the extra amount for the payment. And once the rules are notified and once the clarity comes in there, companies have to again pay out separately to the employees.
Sir, but as far as the wages is very clearly defined.
Mhm.
So where is the question of waiting for the rule for making a provision? Wages.
Not the rules, but wages is defined, very
Yes,
clearly
very
defined.
clearly.
Sir.
There is no scope for talking that yes.
Correct.
Let me wait for the rule.
Correct. But you see,
Rule says only the procedures.
correct, I agree. I meant like guidance, or a guidance note on this. I come to see wage definition we already saw.
Very crystal clear. So where is the
No, they
question
are
of waiting for
vague.
the rule?
Yes. See, I will tell you. See, the exclusions have been provided. Exclusions have been provided. So, is there an incentive pay? If I am paying incentive or a bonus or RSUs, ESPP, ESOP, whether do I need to consider that amount?
One second, sir. Bonus is very specifically excluded.
So, if you are paying it as per the bonus act, it is excluded.
No, it
Bonus
says bonus.
payable under any law. Under any law. But if it is, the bonus act is not applicable, but still the company is paying performance pay.
Then you will fall back to the first
So it has to be
non-exclusion.
it has-
Because non-exclusion is an inclusive definition.
Correct.
And it says whatever in the form of money it can be expressed. So automatically you are falling under that.
Exactly, you are falling under that, and the same applies to RSU or ESOP, ESPP.
As long as it is expressible in terms of money,
Hmm.
you are under first.
Okay. So what about motor car, sir? How will you value motor car? For the purpose of wage code, how will you include the value of the car?
But the first line, it doesn't say any benefit in kind. It should be expressed in terms of money.
Correct. How will you value the car? Car benefit, how will you value for wage code purposes? It is not referring to your income tax rules. So there are practical challenges, and if you say that bonus has to be included, my RSU income has to be included, your gratuity payout in my example of 70% may go beyond 170%. The companies are not ready to take that kind of a liability. And as I said, when I had an occasion to speak to Mr. Alok Mishra of Labour and Employment, Secretary for Ministry of Labour and Employment, he says their intention is not to include those items. Because when you look at the exclusions here, commission gratuity is excluded, one-time payouts. So they need to say that all one-time payouts, our intention is to exclude. So we will come out with a clarification on that. So that is why I am saying that as of today, if there is a gratuity liability, discharge it on basic salary and be ready for the higher payout. And if the guidance comes, then based on that you can pay it later.
What about the provision for leave encashment? Because earlier leave encashment, as I said, it has gone up to 100 days. Now it will amount to, it will become a excess provision, 30 days. Earlier it was made at 100 days, so accumulated will become an excess provision. Should I cut down and make a provision for 30 days? Whereas in the case of gratuity, it is other way around.
So if your company policy is getting changed to 30 days, then you can reduce it. But if your company policy wants to retain it as 100 days only, then there will not be any change in the number of days. But your wage definition has changed. That need to be recomputed applying the new definition.
Obviously, because company, one side gratuity is increased, the other side
exactly.
leave encashment has come down. So they will also, as a business perspective, they will take a legal view only. They will not say, okay, generous, I'll give it.
Correct.
So in that case, the provision for leave encashment will reverse in case of the company.
Yes, you need to reverse that. Yeah. And another aspect is like the Karnataka Shops and Establishments Act to give 45 days as a carryover, not 30 days. So which one will you follow, whether 45 days or 30 days? So that is also a grey area. So when, in my view at least, when there is a conflict between these two, better to go with the one which is providing more benefits. from a labour law perspective. Yeah.
As a professional point of view, if they don't follow this course, whether we have to qualify this reports?
Yes, 100%. Very strongly you should qualify that. Because unless you see the gratuity and leave encashment impact as per the new codes, true and fair view cannot be applied in my view. You cannot certify that the financial statements are true and fair.
It has a very big impact on the gratuity amount.
Gratuity is the big impact.
What about the reversal and provision of this? It will come under the accounts under the above OCI or where it will go for disclosure?
What reversal?
The impact of these provisions.
Okay, in your case 100 days and 30 days.
Where it will come as a disclosure in the annual accounts.
Notes to accounts. Maybe.
No. It will go under the OCI or on the regular reversal of provision also.
No, OCI in the sense like OSH code you are referring to.
No, other comprehensive income comes in the balance sheet, probably disclosure.
Okay.
Where it will get classified. Will it go down below the PBT or profit after tax, or it will be under the regular?
Okay, you mean to say that extraordinary item?
Where it will get disclosed.
Could be an extraordinary item. I'm not pretty sure of that. But from a statutory auditor has to take a call on that.
What is our India AS?
Yes, I'm not sure. Audits I have done only during my articleship period.
Everything is a mess.
Guidance notice.
Maybe guidance notice required. There is a lot of work which has to be done by the institute.
It is a very big. It has to shiver before siding.
No, that is true actually. Yeah, it's a big impact from the gratuity perspective. Net profit, and if the company has taken gratuity insurance, there will be actual cash payout. I mean, insurance has to be taken with the higher amounts now. Insurance coverage, gratuity insurance coverage is mandatory in Karnataka. Karnataka government has made it mandatory from last year onwards. So in that case, there will be a huge cash payout, not only provision, there will be a cash flow issue also to the company. Any other questions?
When these rules are going to be notified, any ideas?
So they have to come out with the draft rules shortly, and once the draft rules are published, there will be 45 days time period for the public discussion, and after 45 days they are going to notify the final rules. At least it may take not less than 2 months. So it is
already 4 years is over.
just 2 months only. Now we have waited for 4 years. Another 2 months is not going to
It
make
will
a
be
big
benefit for
difference.
the company also, because the auditor will qualify one side, the company will reply on the other side. Because of the ambiguity, yeah, so that reply to the audit.
No,
the
it's
audit
not disclaimer
report.
only. We are on disclaimer note.
Yeah, you are giving disclaimer. No, you will qualify as not following the.
Disclaimer may not be enough. If they are not following wage code, disclaimer may not be enough.
It will come on the main report and settle there only saying that the company has not
After 2
followed.
months means it's February. Hardly 1 month is left for us.
So,
How the implementation will affect?
No, I mean, at least see,
In fact, it will be for the next year only.
no,
Not
auditor has to compulsory mandatorily say that they are not followed this code.
because codes are in effect from 21st November only. So when the codes are in effect, how can you say that operationally it became effective from April 1st? So I don't know. That is not that's an aggressive.
Only this way or that way. They are not given any valuation. Only the management will reply that yes, this is not required, therefore we are waiting for all those things. Reply to the audit. Because mandatorily even the management has to, company has to reply to the audit qualification. They cannot silently say.
But many companies are already they're re-looking into it, they're preparing for it, they're seeing how it could be mitigated. But still, I mean, whatever mitigation strategies they adopt, it's not going to be as of today.
It is going to be,
They have to be ready with the
any financial
impact.
impact. Specifically the software companies and all, they are
Yes.
paying the fancy salaries in a different rates.
Yes, yes. And also when you look at their salary structures, it's a very lean structure because everything went go and sit in the special allowance. Because of the simplicity, say Income Tax Act anyway not providing any benefits under the new regime, so let us make it simple. So they went and made it very simple, but now it is hitting them very hard.
Software employees will be, workers or employees will get a very big benefit. The gratuity, already the salaries are high, the gratuity is going to spin up.
But anyway, 20 lakhs may get retained. So in that way, maximum payout will still be 20 lakhs per employee.
Where that cap.
Cap will still be there, but even then, I mean, the person who is drawing, whose payout may be 10 lakhs today may become 15 lakhs. There also huge impact can be seen.
You're sharing this PPT?
I'm not sure. I think it's maybe shared.
It's there. You can add 2 more slides in there. So you have did one. What are the old acts going away and coming to one? So like that, you can do for other courses also.
I have done for all the courses.
No, only one.
See, this is the code on wages. 4 codes are coming under code on wages. This is the code on social security. These are the codes coming under social security. This is the OSH code. These are the codes coming under OSH code. And this is industrial relations code. 3 codes are coming, 3 acts are coming under industrial relations.
So in the case of Factories Act, there is the appointment of occupier, all those things. Are all retained in this law?
More or less it is retained. So retrenchment rules have been relaxed to a certain extent in the new codes.
Number of employees is.
Number of employees now it is 300
300.
to apply the retrenchment compensation rules or the procedure which you need to follow. Earlier it was 150 I think, so now it is 300. So
They can close down. Below 300 means.
these stringent rules are not applicable kind of thing. More from an ease of doing business perspective.
But the wage definition for leave encashment is also same, no?
Same.
So that is expanded, that gets compensated a little bit.
The new definition is
Because earlier people used to adopt a basic plus DA, now
Correct.
the wage.
that also goes up. That is why even that may go up. The payout on leave encashment also may go up. And as I said, like many companies, they do not have leave policy at all. They mandatorily leave has to be availed. They won't allow to carry over. So those policies also need to be changed now. So many complexities are there. It's a very huge area to be looking into. All HR policies may need to be redrafted. Full and final settlement 2 days. So currently they may have 1 month, 30 days.
Now what is the full and final settlement, sir? Time period?
2 days. Within 2 days you need to settle the employee wages. 2 days is very, very less time.
That comes under which code, sir? That is within 2 days?
That comes under code on wages. Code on wages only. The last one, full and final settlement. 2 working days.
2 working days from the date of
From the last day of working. From the last day of working.
That includes even the gratuity also.
Gratuity will not include. Gratuity the company will have 30 days to pay.
30 days time.
But leave encashment is that 30 days is not given. No mention on that, so it may fall under the full and final settlement. Now see, many companies, the procedure itself is like that. He has to go to technology department to surrender the laptop, their email IDs have to be deactivated. Those things to verify itself, it may take a week's time. But now they have given only 2 days to go with the full and final settlement.
But where it is mentioned, sir, for gratuity at 30 days?
Under the gratuity provisions.
Gratuity under the social security.
And the social security code. Yeah.
All the formalities they have to finish before retirement day. Taking the laptop and
No, that means another 1 week or 10 days the employee did not do anything. Idle time. Again, employer has to bear that cost of idle time.
last 15 days salary he has to pay without the
Exactly, yeah. And it is going to be like that if this is the case.
And after the full and final settlement also, employee is called for to give some clarification.
But the definition they would have made persons paying less than 18,000 rupees as a worker and more than 18. But they have put all the skilled everything in the first definition
Yes,
and again brought down here to 18,000.
Yes.
For
Yes.
example, for my CA student
yes.
who has completed intern,
Correct.
he is called as a skilled or worker now.
Good question. So he is in a supervisory capacity or not?
No. I am paying 15,000.
15,000.
Yeah.
So that is a
worker or skilled?
worker. Because 2 conditions have to be satisfied to treat him as a
Actually,
non-worker.
he is a skilled person.
But still he is going to be a worker.
Worker. So it's
No, see, here worker.
behind his.
No, the thing is, here worker need not be seen as a, lower level employee, because worker is getting more benefits. In fact, leave encashment is available only to a worker, not to an employee, as per the code. So that the distinction is given to reward them in a different way, maybe a little more rewards than people who are at the higher level. That may be the objective.
So, but leave encashment is available to all, no?
Workers only. As per the code, it is workers.
So, other than the workers are not eligible for.
Not eligible for leave encashment as per the comment. I would say that there is no mention of the leave encashment benefit for others as per the codes. But shops and establishment gives to everyone.
So, strictly speaking, there is no requirement of the provision also for entire employees. Only workers, we can make that actual valuation and make a provision.
You can, but still you are violating the Shops and Establishments Act, right?
Yeah, that is the number of days only violating. But the eligibility.
No, eligibility, Shops and Establishment Act extends to all employees.
But in the case of factories.
No, there is no such mention in the Shops and Establishment Act. Any establishment, it says. Word establishment includes everyone, all entities includes.
But shops and establishment applies only to the shops and establishments, no?
Correct, but all entities are shops and establishments only. You have to get
Factories
registered.
are, if they are registered under the factories, they are not coming under the shops and establishment. No?
But factories has separate leave encashment benefit under the Factories Act itself.
Correct, that is subsumed now, it is coming under
Now it is coming under the.
So the employees under the factories will not be eligible for leave encashment.
No, they are eligible under codes and only if they satisfy the worker definition.
Worker.
Worker definition.
Person who is working under the factories, who is coming under
Generally they will satisfy the worker condition. So their
So the-
interests are retained in a way.
So the senior level employees or supervisor level employees who is working under the other than shops in the establishment are not eligible for leave encashment at all. Can you say that?
Yes. As per the codes, yes. Yeah, as per the codes, yes. But you need to look at the Shops and Establishments Act because that is state legislation. So what exactly the provisions in the Shops and Establishments Act also you need to look into and then take a call.
Even that case also, even if you cover it, everyone by 45 days.
45 days.
That's all. Not
The benefits are more in a way. Here it is 30 days. Then can you say that for worker I give 30 days as per this code, but for others I give 45
Parity
days?
will come.
No, it is a discrimination. Right?
Discrimination. sorry.
Discrimination.
of the-
Yeah. So that is a practical challenge. These things could have been thought through and revamped in the courts at least during these 4-5 years is what I think. But somehow they rolled it as it is.
Shops and establishments are under the state.
State legislation. And those are not subsumed. I mean, do not be under the impression that once you follow these 4 codes, all labor laws have been taken care. That's not correct. Shops and Establishment Act is not subsumed. And then Profession Tax is not subsumed. Apprentice Act is not subsumed. POSH is not subsumed. Those are different acts, independent acts, and they are still in existence and very much valid as of today. They are not subsumed under the codes. Minimum wages is subsumed under the code on wages. Minimum wages is subsumed, and now the floor wage will be defined by the central government for the minimum wages, and the state governments again can notify the minimum wages, which has to be equal or more than the floor wages prescribed by the central government. It cannot be less than the floor wages prescribed by the central government. Payment of bonus act also is coming under the code on wages. Yeah, I think thank you for patience listening and.
Member, welcome back to you again for this study circle meeting on GST Appellate Tribunal, key legal provision, strategies, consideration, drafting and pleading. To develop upon this subject, we have with us CA Madhur Harlalka sir. I request Chairman of Bangalore branch, Manjunath M. Halur sir, to kindly escort the speaker onto dais. Welcome him with the floral bouquet. Thank you, sir. Members, it is my privilege to introduce our today's speaker, Madhur Harlalka, sir. He is a practicing chartered accountant having more than 23 years of experience in GST, Central Excise, Customs, VAT, Service Tax, Foreign Trade Policies, SCM, STPI and incentives. He is also a law graduate since 2014. Madhur has extensively dealt in indirect tax advisory, compliances and litigation matters across sectors for global clients. He had his own multi-services CA firms and also has been a partner with KPMG and GT. Madhur is an active speaker, author and member of Indirect Tax Expert Committee with leading professional firm and trade association. With this brief introduction, I introduce before you CA Madhur sir. Sir, over to you.
After a long time, it's a real honor and pleasure to be back at the Bangalore branch. For a few years I was away from the city in another organization. And sincerely thank you, C Institute Bangalore branch of SIRC, which is almost like my second home since the last more than 25 years now. From student days, I've been coming here from my CA foundation days, then CA final coaching classes, and then when I started practicing 2002, 2003, you call it whatever, destiny or something, I just started speaking here. Used to get calls and so yeah, so today we will be speaking on the key legal aspects of GST Appellate Tribunal. Before I go to tribunal, one learned member while during the break asked me, sir, shall we take up the GST practice? And I was mighty pleased with that particular question because indirect tax as a subject is very, very dear to me. I am very passionate. So to all members, right, if you are thinking that, GST, if you are even 0.02% doubt whether we should take up GST, you should definitely take up the GST practice, compliance, advisory and litigation. By litigation, I will come to you, we will go through this thing. See, GST is one law, it is a very, very real-time law. When I started practice in 2002, 2003, perhaps very few people in India, in our fraternity used to do, in Bangalore also very few, maybe Madhur sir was one of the few people who were doing CA practice that time. It was not an easy line. That time it was excise, customs, even VAT was not there, it was the Karnataka sales tax, right? Then VAT came in 2005 if I am not wrong. Service tax picked up around that time and it became 5 to 8%, right? And there were 4 laws. Can you just imagine excise, customs? I've seen those days. The sheer complexity in the volume of those laws. If we find GST tough today, I've spoken to the industry people. We should have seen those 4 laws maybe 25 years back. It is just simply unmanageable. I'm telling you from my own practical experience. One is obviously reading on the one, practicing in that law, right? So GST is one law, it is a real-time transaction law. It is very, very strategic supply chain to any organization, right? And for the day-to-day operations of the company. And GST is one law compared to any other law, accounting, auditing, direct tax, transfer pricing, where every day there are changes. And there are very few practitioners, even how much I am seeing across India. Yes, there are a lot of people who do the compliance, but very few, there is a huge shortage of good quality CA consultants. So I'm telling you, it's a massive, massive area of practice. Don't think that 7-8 years have happened, only 2 rates are there, so there is no scope. No, you're never too late to start. In your existing clients, only just start doing the GST compliances and consulting. But yes, you have to invest time and effort in reading that subject. Just by doing compliance, maybe that may be a starting this thing. But we have to read and get into the intricacies of the law. If you are into auditing and the other areas of practice, maybe you can develop a youngster for the GST practice. I would sincerely suggest everyone here to definitely have a look at it, because one is the way the profession is changing, the technology, the AI we are all knowing. The traditional areas of practice will get more and more standardized. It has already got, when we were told this 25 years back, that time when internet had come at the turn of the century. Today we have AI. We have created a human, a mini enemy for our own selves. All the ground level work, drafting work, everything will be done. It is understood. Of course, we have to do the monitoring, right? So where is our profession heading next 10-20 years along with the economy of the country, right? Along with the economy of the country, definitely GST is one of the areas of practice. You can add value, bottom line, cash flow of the client, and that is where the client will pay us good fees. He will respect us more. Obviously, we are respected because we are a chartered accountant. But if we give a niche service like GST, let me tell you, don't be in even 0.001% doubt, and please spread this message within our fraternity. So without taking much more time on that, and I'm happy any member can get in touch with me. I'm happy to share my more detailed thoughts, my experiences in the last 20-25 years, right? The other thing is, we started this GST law in 2017. We all implemented, a lot of us, compliances. Now compliances are getting streamlined, they're getting now automated, if you're seeing. Although, there are still a lot of issues, this, that. But there will be a time where completely, if you look at the way the IMS is coming, invoice management system, input and output liabilities, the government wants to lock. Everything will be automated going forward. So today, if I want to look at GST practice, yes, compliance is the good starting point. But then you have to look at advisory. Now advisory, yes, on an ongoing basis, there are these blue sky jobs you may get one time. The thing is with advisory, you may not get retainer. You may get retainer for consulting. Advisory, it is a one-time job. You go, you do a due diligence, you do a health check, you give an opinion. That is good. Even that will be very good. But what is the next step for IDT professionals today in India? I would say. See, I have worked in a Big 4 CA firm in the last 5 years, and in a Big 5. I had my own practice and I went to a Big 5 and then Big 4. And myself, I am seeing how these areas are slowly getting standardized as more people are coming. So when I look the next 20 years of my career, or the next 20 years of our CA line in the tax field, specifically in the indirect tax field, right? litigation, I think, is a wonderful, wonderful opportunity. I myself, just like how our learned members are sitting here, in the last 6 to 8 months since the GST Tribunal was formalized, I have attended as a student, as a delegate, to understand from seniors like Madhur sir what is the importance and what is the scope in litigation. I am telling you, the sky is the limit. And don't think, and you are never too late to start, don't be scared of anything. You have to just pick up the book and start reading, or you develop a young, dynamic chartered accountant, 25-year-old in your office, or you get a good lawyer. But I am telling you, it is a huge area of value addition. I think some people, our chartered accountants have traditionally stayed away from tribunals. Maybe we have been to income tax tribunals, but we have not been to excise tribunals, that is the C-Stat or the sales tax tribunals. I have been both in the last about 20-25 years. And believe me, it is not something rocket science. Yes, you have to put an effort. I am telling you from my own experience. People sometimes, I get the feeling they have a mental block, oh, tribunal, this, that. No, nothing. You put little bit effort, I am telling you, you can be tribunal ready. I think our indirect tax committee of C Institute is doing a wonderful job. I think they are organizing across India detailed workshops to be tribunal ready. There are so many online courses. Please attend. Today, the session, I will just give you an overview of the tribunal provisions and some practical aspects, 1 hour. It is kind of a curtain raiser. You want to actually get into the skin of the tribunal practice. I will request Manjunath sir, I think the indirect tax committee, 6 days program, that is yet due, we have already held it in the Bangalore branch.
No, we haven't.
Okay. So I think, I remember, speaking to, I was there at the IDT committee, one of the webinars, and I think Mr. Manjunath was quite keen. He's one of the, we wants to take the lead that Bangalore, our branch should be hosting. But yeah, I think back to back so many other bigger conferences we've been hosting. So I'm sure that will be on the priority list of Manjunath sir, either in this calendar year or in the coming calendar year. And please don't miss that. Take an initiative of attending that. That is when you will really get to know. Today I have made an attempt in my own small way to highlight certain key aspects. One is the legal aspects. What are the key provisions? I have not got into the GST Appellate Tribunal procedures. These are all mainly day-to-day appointment and day-to-day functioning of the tribunal. Second thing I will not be including in this presentation today is the appeal filing procedure, which has just been released by the Finance Ministry about 1.5 months back. Right? I think for that we will require a separate webinar of 2 hours only to understand the nitty-gritties of the procedure of how to upload the GST Appellate Tribunal appeal on the GStat portal. So this may not be the right forum. I think this forum is for us to break the shackles, understand there is a tribunal, what are the high-level highlights and features, where does the most important thing, opportunity, where we can contribute to the society and to the businesses, make a name for ourselves. It's a very, very prestigious practice, GST Tribunal, I'm telling you. Once you get proficient, clients will respect us more, they'll pay us fees. Because litigation is one thing, client will come to us because of his need. It is like a patient in ICU. I mean, they cannot question why this thing went here or there. Whereas in compliance advisory, we still try to, pursue the client with that. So that is again a mindset shift. The client perceives great amount of value in the litigation. And High Court, Supreme Court, we cannot go, but as chartered accountants, I think we are half lawyers. We can definitely, represent up to the tribunal level. So my humble request to all the delegates and the practicing members here is, and including if we have members in industry, I've seen my clients, they take advice from us, but they have their full-fledged teams who do the entire tribunal and they go and appear themselves. So nothing stops the members in practice or members in industry to pursue this particular aspect of our profession. I can only say we are just very lucky in our lifetime to be at this juncture where GST was introduced 8 years back, the tribunal is just now come, and we are on this growth trajectory of our Indian economy. Right? So with that background, I will quickly start. See, what is the legal framework of the GST tribunal in India? It goes down to Article 14, obviously, of the Constitution, equality before law, Article 21, personal right of personal liberty. I have not mentioned that here. Tribunals, essentially, there is a mini constitution amendment, 42nd constitution in 1976, that is called the mini constitution. A lot of provisions of the constitution were redrafted. So there again a landmark articles 323 and 323B, they were introduced talking about the tribunals. Now 323A article is more talking about the administrative tribunals The tax tribunal is coming under 323B. So this is really the constitutional and legal foundation of all the tribunals which have been set up in India. I think if I'm not wrong, one of the oldest tribunals in India is the Income Tax Appellate Tribunal since 1941 during the British time. Then obviously we have the Central Goods and the GST Act read with the rules which talks about the entire tribunal formation. And then we have the Tribunals Reforms Act 2021 which talks about the conditions of service of members, their appointment and all. Even that is equally important. Because see, for tribunal, it is very easy for us, but see the government side also, it takes a lot of time first of all to have a statutory and legal mechanism in place. We need physical infrastructure. Most important, we need very, very competent and senior judiciary to adjudicate the cases. And let me tell you from my experience, we may feel tribunal is just another litigation forum. No, I feel it is one of the wheels, and I've been very vocal about this in all the seminars in the last 20 years I've spoken. Tribunal is one of the wheels on which the Indian economy runs. We all know at the time of assessment in GST, if there is a show cause notice, it gets converted into a demand. Majority of the cases from first appeals, it goes to the tribunal. And now the cases have been stuck in the GST, at the first level, wanting to be filed in the GST tribunal. So tribunal is just not any other dispute settling this thing. It is, once you get a relief from the tribunal, unless the matter is very high even for the department, and they have some high thresholds to file appeals before the High Court and Supreme Court. Right? It is one of the wheels on which the Indian economy runs, which means the businessman, more often than not, if his case is strong, if his documents are in order, they get a favorable order. I am saying the success rate at very least is at least 70-80% of all the SSCs at the C-Stat level and now the G-Stat level. So you can say the G-Stat is having a direct contribution to the Indian economy. That is the importance. And if you realize that importance for your client, and if you just reskill in the next 6 months to 12 months, we will just shoot up like rockets. That is the thing. Now we'll say why GST. Now one of the things is that there has been some delay in the formation of the GST tribunal. See, what has happened is when the GST law came, that itself, it was running against time, that we wanted to get the GST law way back in July 2017. By the time the law settled, we had these portal glitches and all. Then obviously the thinking was, how do we set up the tribunal, whether it will be one tribunal, whether it will be on the line of C-Stat, whether it is only regional benches, or whether every state will have a separate tribunal. Today GST every state has a separate bench, state bench. Then what will be the composition of the bench? That is where the matters got stuck. There were no legal statutory provisions. Or the provisions were that, okay, judicial member and technical members, or judicial members were not enough, so there was a Madras Bar Association. The advocates filed appeal in Madras High Court, which was then escalated to Supreme Court, that there is not enough representation of advocates as judicial members. So for any tribunal case, there has to be one judicial member who will look at it from the legal principles, and one is the technical member. Technical is the GST law. So there was not enough appointment of judicial members initially when the GST tribunal statutory provisions were formed, and that is where unfortunately this whole thing has got delayed. The provisions came, it was challenged, it went to Supreme Court, then the government amended the law. See, all these things take time, at least minimum 3 to 5 years gets lost in that. So if you take 2017-18 when the GST law came, 5 years also in 22-23, that is after all that litigation, they started notifying. Once all the legal hurdles were cleared, they amended the law, even the constitutional, the provisions pertaining to how will we recruit so many members. That committee which was formed to recruit the members of the tribunal, even those were a subject matter of constitutional challenge. So it went through some really, really rough times as far as the legalities were concerned. So we feel, it is easy, this, that, and all, but it really got caught in a lot of legal hurdles. So I'll not take much time here again. If you see, that was 2019, then between much of the 2023, the legal hurdles got cleared. They started notifying the principal bench, which is in New Delhi, and each state will have a state bench. Now this is a marked departure from C-Stat. C-Stat will have all the 4 major cities and maybe another 6 to 7 regional benches. But today in GST, every state will have its own GST tribunal bench. So that is massive. You just imagine the amount of work the government has. They have to have physical buildings, they have to have the IT infrastructure, the manpower, the very experienced judges. I mean, it's not a small task what they are up against, the government. And parallelly, they were trying to implement this difficult GST law itself, the compliances, the portal glitches and things like that. Now, much of the action has happened probably in the last almost less than 2 years, where in 2024 they released, inviting applications for appointment of members. Justice retired Sanjay Kumar Mishra today is the president of the GST across India. He was appointed on 6 May 2024. Now, meanwhile, what happens? By then, 2024, the audit's assessment started. Obviously, there are demands at the audit and assessment stages. Commissioner appeals also cleared, plus or minus favorable or negative orders. I don't have a forum to go. It is unprecedented probably in India's tax history that I have a demand. I want to contest, but where do I go? Lot of the SSC started going to High Court, even down. Even day before last night, there was a High Court judgment, Guwahati High Court, challenging Section 16 input credit restrictions, which are, So this is the kind of overload the judiciary already has. So what they said, the circular said, because you pay pre-deposit if you want to contest the tribunal, you give an undertaking to the department, you do a pre-deposit through your electronic cash or credit ledger. Once the tribunal is up and running, please apply that towards the pre-deposit liability. Sum and substance of that circular is that. I will not again get into the nitty-gritties because that itself will take up a lot of time. So this circular came about 15 months back. That was kind of a lifeline. So that gave us very, very broad direction into, if I want to contest an appeal for GST tribunal, where am I heading as an SSC? Then, compared to the 2023 notification, they have revised them finally in between July, August and last December 2024. They have finally notified all the state and center benches after making minor changes in their jurisdictions. Right? In April 25 this calendar year, they have notified one of the most important things is GST Appellate Tribunal procedure rules, which means once we have the legal framework in the statutory books in the GST Act, when to file appeal, how many sets, what is the dress code, what is the timing, it is that tribunal procedure rules run more than 100 rules. So again, that is a landmark development in the evolution of it is just regrouping again, there was a C-stat, it is handling parallelly, I'm handling some service tax cases right now, appeals filed in 2011 are coming up for hearing now, 15 years later, in which I'm part of some hearings and I will be part of hearings in the next coming months. Right. So it is an evolving process. Various state constitution of principal bench will be at New Delhi. Various state benches were notified. The appellate tribunal procedures now they have notified. So from ground zero they are building up this whole tribunal mechanism again, legal and the physical infrastructure. And then you have to have detailed rules. I would strongly suggest, please go online. All these are available in the public domain. Just have a glance through it. Obviously, it is not practical for me to discuss each and every rule in detail. But these are really the functioning, the powers of the tribunal, the do's and the don'ts, rectification, revision, what all are the different applications you can file for withdrawing an appeal, restoring an appeal, amendment of an appeal, rectification, stay, miscellaneous application, interrogatory applications, and things like that. So GST Appellate Tribunal is like, it is like the spine of the entire tribunal practice. Now recently, 4 months back, they have already appointed judicial and technical members for, you see the work again before the government. It is not easy to appoint. We may just say the government has power. No, you need proper committee, invite applications, evaluate their candidature, notify them. It is a big, big task, let me tell you that. So they have appointed judicial and technical members for center and state for the principal bench. As I said, every tribunal, every state bench will have 2 judicial members and 2 technical members. Each technical member in each state, because there is a CGST, SGST involved, right? 9%, 9%. So technical member has to be equally represented, center and state. It is a classic case of cooperative federalism, like how we have the GST Council, where all the state finance ministers, they have weighted votage of 75% and only center has only 1/3 or 1/4 voting rights, right? So that is the importance given to states in GST. It is like perfect, classic example of cooperative federalism. Now just imagine to discuss all these contours, the nitty-gritties, first it has to be approved by the GST Council and then the government has to go about doing this job in recruiting these kind of learned members. Now on 24th September, our Honorable Union Finance Minister, she inaugurated the GSTAT. It was there in the media, it got quite media coverage and they made a lot of announcements. Can anybody guess the estimated number of appeals which are likely to be filed? I am just throwing up this question, I am sure people must have had some idea here. Any guess what is the estimated number of appeals which are likely to be filed in the tribunal across India? Take any guess and don't, please be free about it. I mean, nobody will.
20,000. 20 lakh.
No, 20 lakh is no.
50,000.
It's close to 5 lakhs. Close to 5 lakhs across India. Can you just imagine? 5 lakhs is the total pending cases at the first appellate authority. Some of them have been cleared, some are still getting adjudicated. You take a minimum conservative of 50% cases you're not winning at the first appellate. At least 2.5 lakhs is guaranteed at the tribunal. Do we have that many professionals in India to cater to this? This itself is a huge business opportunity. I mean, it is self-speaking. Just Google it today, tomorrow, whenever you get the time. What is the pendency? This has been officially told by our Honorable President of the Principal Bench. I've attended many online workshops which they have given. So they are estimating 5 lakhs. It could be a couple of lakhs here and there, but 2-3 lakhs, so it is not from anywhere. Entire appeal will be online. There is a GST separately portal. So there is a GST portal. There is a tribunal separate portal. There was a separate portal where advocates and chartered accountants had to register themselves 6 months back when these procedure rules came out. And the ministry has said for all the past pending matters, the orders issued by the first appellate or the revisional authority against which you will file appeal before the tribunal, you can file appeals till 30th June 2026, which means orders passed as in progress till 31st March, appeals in a staggered basis, installment basis, depending in which year. So they notified some slabs. If your order in original or order in appeal was between 21 and 22, by November end you can file this much and so on. Last date to file appeal for tribunal is 30th June 2026 for all orders issued up to 31st March 2026. For any new orders issued on or after 1st April 26, it is 3 months from the date of receipt or communication of the order. That is the timeline. So 3 months is the standard time anyway. But even now, we have 6 months, almost 7 months time to file the appeals. We need not be in a hurry, but yeah, we need not wait till June because there is a good chance the June, the servers and all will be totally, heavily done. As we are talking now, I am given to understand the portal is already having some glitches. They may not be accepting the appeals itself. In that case, what I will tell you, please keep your strategy ready. Please keep the submissions ready. There is a download, there is an Excel utility file, download, fill up everything, keep all documents ready. Because what will happen is the moment portal is up and running, you can just copy and paste that appeal matters, the submissions, upload it along with all the PDF documents. It should be a 1 or 2 day job maximum. So it is a very detailed procedure first of all to upload the entire thing. Imagine this time the judges will be seeing everything online by hearing you. It is again a fundamental departure in which way the tribunal practice and the tribunal adjudications or the tribunal hearings will be conducted. They have said either online or in person. I don't know what will be the impact of online representation before the Honorable Tribunal. I always prefer in person, right? But when you are in person, all your submissions will be watched on the computer by the Honorable Bench. Today, when you go before the bench, he's seeing the physical submission books like we've been used to last so many years. So this is again the fundamental shift. So if you want the desired results, it is up to you, to us as practicing members, to advise our clients to be ready at the earliest. And as I said, there is a detailed FAQ, user advisory, there are enough demo videos on C Institute website. I think they will have these webinars stored already. The detailed procedure to file the appeal, it will take at least 1.5 to 2 hours. The demo has been given directly by the Ministry of Finance and Tax TRU officials along with our C Institute. So one commendable thing again, our C Institute, both at the regional and central levels, they have been at the forefront of taking the maximum initiative to spread maximum awareness about GST appellate tribunal procedures and rules and regulations. So this is the legal background, this is the status of the GST tribunal, why it got delayed. As of now, this is the latest position as far as we are there on the GST tribunal. Now, we'll just look at quickly the litigation hierarchy, 7:30 already. We'll quickly look at the litigation hierarchy. As we know, like any other taxes, there will be an order in DRC 07 by the GST adjudication officer, right? That is an appealable order. So what the provisions say, any order by the adjudicating authority or by the revisional authority. So first appellate authority and revisional authority, against that you can file the appeal in tribunal. but which is the order which goes against which you can apply in first appellate authority. So basically you have the GST adjudicating authority against which you can file a commissioner appeals, or first appellate authority you can file under section 107. Then appeal to GStat will be against order of first appellate authority, which means against order of commissioner appeals, or revisional authority. Revisional authority is here just like I think in our income tax 263 or 264 or 12, the earlier income tax. I have not read the new income tax bill. So these are the two authorities against whose orders you can file appeal in GStat. Once you are at the GStat, depending on how the order is, if you want to pursue it further, you as an SSC or the department. Next is High Court, only on substantial question of law, which means like other tribunals, final fact-finding authority will be GStat. So you have to be very, very spot on your facts, your documents, your evidence, because High Court and Supreme Court is only going to be interpretation issues or constitutional aspects. Now again, one very, very important thing. Appeal to Supreme Court will be High Court only for the state benches, which means if there is a tribunal order from the principal bench which is in New Delhi, that order is straight away appealable to the Supreme Court and not to the High Court. That is the only exception carved out. Whereas all state benches, let's say Karnataka, it has notified 2 state benches. I have again not, they've notified benches, I have again not put that notification, otherwise that itself will take a lot of time. So if I am not wrong, Karnataka has got 2 benches along with circuit benches. In Bangalore there are 2 benches, maybe additional circuit benches will be there, maybe Hubli or Belgavi cities. So we in Karnataka state have 2 benches, mainly pertaining to Bangalore, right? So whatever the orders passed by the state bench is directly going to High Court. But if your case is in Delhi, you can go after the tribunal in Delhi straight away to the Supreme Court. Please keep this thing in mind, extremely important. Why extremely important, I'll tell you, is because there are only certain matters apart from the regular matters which the New Delhi Appeal Tribunal will be able to hear. So we have to be very, very careful in which forum, in which jurisdiction we file our GStat appeal, depending on the topic. I'll come to that in a while. And then obviously for any violation of principles of natural justice, we have Article 226 and Article 32. By passing the appeal, we can directly file a writ petition in the High Court. I've had a lot of such cases where arbitrary orders, lack of jurisdiction, non-application of mind for non-following basic facts or covered matter or judicial precedents. If there is a negative order, you can straight away challenge it, not go through the appeal, go through Article 226. It's a very, very potent weapon. The entire case laws, what you see in the last 7-8 years, most of it is High Court. Every day they are overburdened with the GST cases. As recent as today and day before yesterday, I told you that Guwahati High Court judgment challenging Section 16 has come, very, very important. Now, what is the architecture of these benches? Again, as I said, based on that Bar Council, the Madras High Court Bar Association, now they have, by and large, this is going to be the architect of the benches. One president in the principal bench, that is Honorable Sanjay Kumar Mishra ji, he was appointed on 6 May 2024. One judicial member, 2 technical members, each center and state. Same thing, each state will have 2 judicial members, 1 and 2 technical members. Now in state, amongst the senior most judicial members, one of them will become vice president of the state. Like how there is a principal, there is a president of the principal bench. For every state bench, there has to be a vice president. So amongst the judicial members, the senior most will become the vice president. He's like the senior person and he will distribute the cases and oversee the administrative formalities of functioning of the state benches under his jurisdiction. Very, very important. And each principal and state benches to hear appeals against orders of first appellate authority and revisional authority of their respective states. Now, this particular slide is extremely important. There are certain cases which only the principal bench will hear. Only the principal bench will hear. So we have something called a place of supply. It is again a very, very unique concept. In service tax, if we remember, there is a place of provision of services rules 2012. That which place, but that was more cross-border. Your place of supply, because GST is a federal law, 28 states and 8-9 union territories. So there is a place of supply provisions in IGST Act. So if you have one assessment order or an appeal, or an order and appeal from the first commissioner, there are 10 matters. One of them, if the dispute is pertaining to place of supply, the entire appeal shifts to only principal bench New Delhi. Again, this is very, very important. Now this will overload, this has a potential of overloading the work of the principal bench in New Delhi, where out of 10 issues, if one issue is also place of supply, the entire appeal has to be compulsorily filed in New Delhi. See, please don't go and file it in Karnataka or in some other state if place of supply is one of the issues you want to contest. So, at which forum? Forum shopping is extremely important. You lose crucial time because the appeal is all time bar, right? 3 months plus another 3 months extension. You will lose crucial time. I am not sure whether they will give you additional time if you by mistake file in one state and then realize I have to file it in another state. The only time excluded for appeal filing is if you are in writ petition. Then your order is stayed. That time, if your writ petition takes 6 months, 12 months to decide, only that time is excluded to calculate limitation, but not if you went to the wrong state. So please be very careful. Anti-profiteering matters prior to 1st April, because April 1st onwards they have removed anti-profiteering authority. Although anti-profiteering cases can still be evaluated by the department or other regulatory authorities. Then another very important thing. If Karnataka bench gives some order on some issue, intermediate issue for example, Tamil Nadu gives something else. How do you resolve this? Different tribunals have different views in excise and sandbag credit we have seen, right? So they have now made a provision that if 2 or more states give a conflicting view, the president, the principal bench, the president has the powers to take these matters before the principal bench. This is for uniform application of that particular law across India. So this is again a very good welfare measure. Then ISD, again input service distributor, I will not get into much detail. Basically third-party common vendor invoices which you get at the head office, which pertains to the branches and you distribute it. Again, state GST is a state-specific law. You have to track input, output. It operates on registered taxable person. Each state is a separate legal entity as far as GST is concerned, unlike income tax PAN. Okay, so all your credits, liability, you can't set up against each other state. So practically every state is a separate legal entity. So in input service distributor, the credit distribution mechanism is again very contentious. It is made applicable compulsory only from 1/4/2025. From 1st July 2017 till 30th March 2025, people have not done ISD, they may have done cross charge, they may not have done both, they may have done both. Whether they have used the correct ratio, we don't know. There is going to be a lot of litigation here. Because each state will say, no, this credit will belong to me. So whatever is of national importance, centralized in Delhi, that dispute. So again, please remember that. Then supplier of online digital online information and database access or retrieval, basically or online digital services on online money gaming services by people located outside the taxable territory. All these PUBG games and all the social media apps, everything, if they are located outside India and if they are rendering those services in India, if there is some dispute pertaining to that, because there are special provisions, they have to have representative SSCs in India. All these provisions, if there is any litigation, you have to fight it at the principal bench. Last but not the least, in advance ruling we must be knowing. Now see how beautifully this whole thing is converging. Advance ruling was a separate thing, that if you want to ascertain applicability of a particular transaction to tax, there was advance ruling, then there was appellate authority for advance ruling at each state, and then different states used to give AAA different rulings for the same SSC. Now here there was no particular forum, or there was a forum which was not notified. They had, it is there in the statute books but never notified. So if I am an SSC, I have conflicting advance rulings at the appellate level in the 2 states, 2 or more states. Now those cases will also be heard by the principal bench. So these are like your 3 golden rules of accounting. These 6 cases, blindly just go to New Delhi jurisdiction and file. Don't go to any other state. Extremely important, the jurisdiction. Now, single member bench will hear cases up to rupees 50 lakhs for each law. So this limit will be 1 crore, CGST and SGST. So typically any appeal is heard by 2 members. One will be judicial member, one will be technical member, center or state. But if your matter is below 50 lakhs, at the discretion of the president, only 1 single member can hear it, right? And which does not involve any question of law with the approval of the president. And this 50 lakhs is for CGST like that plus SGST. So you have to calculate all of 1 crore for both CGST and SGST. Or if it is IGST, it will be 1 crore. All other cases, other than the above, will be heard by at least 1 judicial. And see, it is very important when we are advising the client. All this is the talking points the client wants to know all this. Effectively now, how beautifully the advance ruling is also converging. Advance ruling is converging. Everything. It has become a one-stop shop for all the GST litigation. Mind you, the customs litigation will go parallelly. The BCD, IGST, all that will go parallelly. Foreign trade policy may not come in. This is your GST law. Everything will come and converge at the tribunal level and then go to High Court or Supreme Court. Extremely important. Now quickly, I will not spend time here again. See, these are some of the standard provisions even in CSTAT, that they have the powers of a civil court. They can enforce attendance, examine, cross-examine, they can issue summons and things like that. Orders made by the tribunal can be forced like a decree or a court. It is for all practical and legal purposes. It is a deemed civil court. They are not bound by the Code of Civil Procedure 1908, but they are themselves courts in their own right. It is a creature of the statute. They have the power to regulate and have their own do's and don'ts. They are not dictated by anybody, but the statute and the underlying rules. Very, very important. So it's like an independent quasi-judicial authority. Now, these are very crucial things. Who can file an appeal before the GSTAT? Only a person against whom an order is passed. My supplier, my vendor, my banker, they cannot. Unless they are contraband goods, if I am dealing in their goods. So that's one thing. The receiver of my service cannot file. It is a problem in me, I have to file. If I have under or overcharged him, if I don't agree, I will. The receiver cannot file an appeal, say, boss, Madhur is overcharged me, instead of 18%, I will go to tribunal. No, sorry, he is not the person agreed. Now the time limit is again very, very important. Please write it down, 3 months. Don't confuse between 3 months and 90 days. 3 months is not defined, go to General Clauses Act, it is 3 English calendar months. Whether you are 30, 31 or February is 28 or 29, don't worry. 3 months, excluding the date on which you received the order. Within 3 months from the date of receipt of the order or communication to the order. Now what is communication is clearly defined in 169 section. Please, it is very, very important. Nowadays you have WhatsApp, MSN Messenger, SMS, email, GST portal, so many ways of communicating nowadays. Amaranath is there, Telegram is there, God knows so many other apps are there, right? So mainly the postal, registered post, speed post, email and GST portal. These are the modes of communication. The day it is communicated to you or the day you receive, as the case may be, that is the date of receipt. So again, the time bomb starts the day my client tells me, I have received this, I write it, I make it a note on the envelope itself. We have the traditional habit, date of receipt. Because the time starts ticking for me on my table. If I am the CFO or a tax head or a finance manager. And the day my client tells me, for me the time has already started ticking maybe 10 days back. If my client is 10 days, they've come to me last 10 days of the appeal. Forget first 10 days. So this 3 months is very, very important. Let us not wait for extension and get into litigation. Let us have this 3 months. First day when you say, get the fee approval and tell the client, boss, you give me my fee approval, these are the pros and cons. If you want, yes. Because the earlier he says, yes, I can start drafting. Because the drafting itself will take easily, depending on the matter, a couple of weeks at least. And we all know the shortage of staff and how much time it takes. Practically from July to December, half the year, we are deep down in audits, tax returns, everything, right? So extremely important in our own interest. Tribunal at its discretion may reject if the matter is below 50,000 rupees. Now for the department, the appeal is, the timeline for them to file appeal is 6 months from the order date or notified date, whichever is it. Practically 6 months. So SSC 3 months, department 3 months. Now cross objections. Once I come to know department has filed appeal, how will I come to know? That itself no one knows, because that is a grey area. There we need more streamlining of the process. That department should intimate the SSC. I will not know, right? Or if I file, the department, the tribunal or the department there should be effective mechanism. Either I tell or the tribunal tells. So here you have only 45 days to reply. Please be careful. 3 months has become 45 days here. It is also like an appeal only. And this 45 days is for both. And this extension is maximum another 45 days. So for appeal, you have 3 plus 3 months. Department has 3 plus 3 months. For memorandum of cross objections, which means my reply to the other person's appeal filing, it is also like appeal only. It is only 45 days plus another 45 days. Maybe these submissions will be as lengthy had it been my own appeal. So please be very, very mindful of these timelines. Now the thing is, can the department or the GSTAT or High Court condone beyond 3 plus 3, 6 months? 6 months, assuming I am totally terrible. Sometimes my clients only notice the appeal, the orders or the notices 6 months after, because they don't have a streamlined process of checking the GST portal. So what if you realize after 6 months, suppose there is an appealable order on the line on the GST portal, my accountant went on leave, MD went on leave, CFO is not there on leave, what do we do? There are no provisions. We are left at the mercy. Article 226. We have precedences under excise and service tax law. Depending on actual genuine reasons, only they will give us an extension. In the statute, there is no mechanism. There is no mechanism, and I doubt if the tribunals have the power to go beyond 6 months and 45 days and 45 days. Now this is the most important thing. So one is the timeline within which you have to file the appeal. One is the pre-deposit, because the moment you go to any client, he'll say, boss, okay, how much is cost, time, everything, right? So first of all, out of 100 rupees, how much ever you are accepting, 100% of the admitted tax, liability, interest, penalty, fine, fee, penalty, you have to pay it upfront. Then whatever is the disputed tax, 10% of that you have to pay through pre-deposit. Now this is where most of the discussions happen with the clients. They are okay with the 3 months thing. And assuming you don't want to go in for a writ, right? 10% is a huge cost, because already at the first appellate level, you have already paid 10%. That will not be refunded. That will not be refunded to you if you want to appeal further. So this 10% plus in addition to 10% of first appellate, maximum, large listed companies I've seen the maximum goes into hundreds of crores. So they put a cap here, 20 plus 20 crores. 20 crore for CGST, 20 crore for SGST. So maximum cap is 40 crores, but this is only at each stage, which means maximum 40 crore you have to evaluate at first appellate, maximum 40 crores you have to evaluate at tribunal level also. It is not like 40 crores cumulatively, no. So this 10% is extremely important. This is where the CFO will do the mathematics, the MD will do the mathematics. Oh, 10% if I pay, what is my cost of capital, working capital interest, 10% I have to borrow, I have to on 10% interest I will suffer. This is where the actual numbers will matter. Once pre-deposit is paid, the balance is deemed to be stayed till the disposal of the appeal. And for matters pending as of today, please go through the circular. Now, what are the issues in pre-deposit? What are the issues in pre-deposit? Do you have to pay cash, credit card, what? Can pre-deposit be paid through input tax credit? This is $1 million question till 6 months back. In excise and service tax, they were allowing. But GST, luckily before the tribunal is set up, now that clarity is there in Lesho Industries, clearly they have said, ITC is also like a tax paid, you can use it towards pre-deposit. It is a landmark judgment, very SSE friendly judgment. Now, there is another thing, there is an amendment to the law that if my case is pertaining only to penalty, mind you the 10% is tax, interest, penalty, so I have to pay only 10% of tax, not interest and penalty. Effectively, I don't pay any pre-deposit if I am contesting interest and penalty along with tax. What if I am contesting only penalty? I have paid tax, I have paid interest, so many times the notices are issued under section 74, which means suppression charge. Lot of cases, there the penalty is equal to the tax evaded, 100%. Whereas maybe in section 73, the penalty is 10, 20, 50%, depending on the timelines, right? So there are SSEs who may want to even contest a very high penalty. See, nowadays the companies are very image conscious, especially listed companies that get reported in the media. You have private equity investors also. So all these things matter a lot. So what happens if I want to contest a penalty only case? Unfortunately, I don't think so you can use ITC. At least there does not appear to be any case law circular or anything. You have to pay it in cash if you want to contest only penalty. Then the question is, if I want to contest only interest, I paid tax. I may want to contest interest like secondment case. Northern Operating System came, I paid tax. I didn't want to pay the interest. I said, my lord, it's a revenue neutral case. I paid and I will get a credit. In interest itself, I have seen SSE struggling crores of rupees of liability. If I have only interest as part of my show cause notice, no tax, no penalty, fortunately there is no pre-deposit to contest only interest cases. Now, can ITC of one state be utilized to pay pre-deposit? Again, I told you every state is a separate legal entity. All the credits, output tax are tracked separately, no set-up mechanism. Yeah, balance in the electronic cash ledger, you can move it around. There are enabling provisions now in the last 1 or 2 years. I am afraid the credits cannot be moved around unless and until you do an ISD or you do a cross charge. Maybe you may want to do some legitimate tax planning within the four corners of the law and create a cross charge to shift credits from one state to another. So ITC of one state, can it be utilized? My view is no, I don't see any provisions to the contrary. What if you don't have money now? Now see, this is filing a GST appeal in the tribunal is almost like climbing a Mount Everest. Then you realize there are two other Mount Everest waiting in High Court and Supreme Court. What if you don't have money? SME, on SME business they don't have money. Lot of our cases will fall in this. Not everybody will have closed. I had one client, it was a large German company, 280 crores demand he got. On a classification issue which was known to the department, open check case. He said, boss, I don't have 28 crores, 10 crore pre-deposit. I don't have that much cash in my this thing. Matter got escalated to German headquarters. I said, I'll have to shut down my factory, boss. 280 crores demand. Recently, about 1.5 years back. So what if you don't have, there are no mechanisms, probably you'll again have to knock on the High Court or Supreme Court for relief under Article 226. There again it is complete discretionary. You have to prove that it is a financial hardship. There are cases favoring you and against you. I have not mentioned for the sake of brevity. I didn't want this discussion to be very, very heavy. But we do have precedences for pre-deposits on tax, on penalty, on ITC, and if you don't have money to pay pre-deposit. And if appeals are rejected, if you have not paid pre-deposit, can they reject it without giving you a hearing? Answer is no. There are again case laws on that. They cannot just simply reject appeal without giving you a chance. You go and plead financial hardship, or you tell him, okay, give me some more time, something like that. So this is again the single most important slide if you ask me in the entire GST tribunal. Two things, one is the timeline and one is the pre-deposit, because finally every businessman will do his mathematics. Finally numbers will matter, rightly so. Now orders of the tribunal, they can either confirm or annul the order, they can remand back, the usual powers, maximum 3 adjournments will be given, rectification they have to resolve within 3 months. Now this is very important. There is no statutory time limit for tribunal to pass the orders. They have said as far as possible within 1 year. I am hearing CSTAT cases now which were filed in 2011. Can we say it is mandatory? No, these are more directory. Because today if the GSTAT takes up the appeals of the last 5 years, I told you, right, 4-5 lakh cases across India will be filed. You can just imagine another next 5 years, they will be just clearing the last 5 years backlog. So this 1 year is as far as possible, it is directory, it is not mandatory. And you cannot force the tribunal for a time-bound resolution of any appeal. I know that I was at a recently hearing CSTAT 1 month back, 2 months back. My name was first in the cause list, but before me, pending matters, top of the board matters, the regular matter was before me, but that SSC or that gentleman took 1 hour just to plead his case. I thought my chance will come at 10:30, my chance came at almost 1:30. So you just imagine the pendency. 1 hearing they have to take so much. So you can't tell the tribunal to finish the appeals in 1 year. So this will again stretch. Orders obviously are binding. Now another important thing in excise and custom was on classification and valuation issues, you could directly go from tribunal to Supreme Court. There are no such provisions. That was again for uniform application of the law, because classification and valuation is one of the most important things in excise service tax and customs law. There are no such enabling provisions. So for all classification valuation also, from states it will have to go through High Court, except that the principal bench, whatever the matter, they will go directly to Supreme Court. And principal bench will not hear only those 6 cases, huh? They will hear their regular cases also. So these are again some of the nitty-gritties which are very, very new. The other thing is one state's order binding on other state bench? No such precedences. Maybe it may have a persuasive value. Nowhere under law it is mentioned. It is binding only on the parties. It may not be binding on the benches. Maybe they can bring some enabling provisions. So here again, this is again permutation combination. If you have one single, because a lot of the cases and parties are bunched, if you have single notice, single order in original, single order in appeal, will you file one appeal? Multiple show cause notices, multiple orders, single order in appeal, you will still require multiple appeals to be filed. By and large, if you see most of this, the extreme right hand side, you have to file each appeal for every year, for every show cause notice, for every party, for every GSTM. I will not again spend time here, but this is again a very, very important thing. Sometimes they bunch up all the orders, sometimes they bunch up the show cause notices. Mostly the tribunal filing will follow how many number of orders, order in original or order in appeal they have issued. Extremely important, huh? Because let's say you bunch up the matters and file only one appeal, it can straight away get rejected. You lose time. So again, how many number of appeals to file when the matters are bunched up? Extremely, extremely important for us to know. Now these are GST Tribunal procedures rule. We, with the permission, because I started a bit late, if I can maybe continue another 10-15 minutes beyond my stipulated time, is that okay? Or because I want to give some practical, share my practical input. Of course, there will be more points. So there it will require maybe some time, 10 to 15 minutes. Here again, I have not spent much time purposely on the Tribunal procedure rules. That we can have half a day session only because those are again very, very nitty-gritties and we must know and own up those rules. Apart from knowing what is the eligibility criteria to file appeals, how the tribunal functions, how you should function, what should be the code of conduct and timings, dress, everything. I think that is very, very important. We should own up the entire GST appellate procedure rules. So only key rules are highlighted here. Every appeal or application should be uploaded electronically. Communication and orders to be electronically and filed electronically and signed. All the proceedings will happen online. Replies to be filed and documents to be uploaded electronically. Shall be signed, verified and uploaded electronically. All proceeds shall be conducted through portal. So please keep checking the GStat portal. Please keep checking your GST portal. If not daily, once a week. ASMP 10 has come, DRC 1 has come, DRC 1 has come, DRC 7 has come. Just pay some guy in your, tell some person or have your CA, tell your clients, boss, please check your portals regularly. CA, GST compliance management is all about checking your portals. We've had clients getting into deep problems, they have not checked the portals. Then we can keep blaming the department. But let us first ourselves be very, very diligent. Now, hearings can be either online or physical. But filing is only online. Appeal should be filed electronic appeal file. Manual filing is only allowed subject to order of the registrar. Again, memorandum of cross objection should be filed electronically. Manual filing is again subject to registrar. There is a rejoinder. If I file, there is a cross objection, I can file a rejoinder within 1 month. The other things we covered, service of notification or notice and communication, any notice to be issued by the appellate may be served on the GST portal, registered email ID, speed post. Appeal filing fees is there, 1,000 per lakh, minimum is subject to minimum maximum amounts. Order of the GStat shall be confirmed, modify or annul the order, but if the, and they can also rectify the orders, but if the rectification has the impact of enhancing the liability, it has to be only after giving a personal hearing to the SSC or to the party affected, and that should be rectified within 3 months. And timely disposal of the appeal within 1 year from the date on which it is filed as far as possible. Documents to be filed, again certified copy of the appeal order and the first appellate order. This is very, very important. And all the other relied upon documents. Every appeal shall be signed, verified, signed, everything. At the foot of every appeal, pleading, all the relevant documents relied upon shall appear the name and the signature of the authorized. These are all the standard things for any appeal even today. Translation of documents, if it is the documents what you are submitting, land records in original language, it should be in English language. Interlocutory applications are very, very important. Some of the applications apart from appeal and cross objections, what you can file is on an indicative basis. It is stay, condonation of delay, adjournment, amendment, early hearing, rectification. So when I see Manjunath sir, I think it's come to tell me to go. So I have taken the kind permission of the delegates since I started maybe 10 minutes late.
Please, sir.
Yes. And I acknowledge our senior member Vishnu Murthy sir, his gracious presence in the hall. Pleasure to have you here, sir. He is again stalwart in indirect taxes, Vishnu Murthy sir. Now, so many times arbitrary orders are passed, still the assessees will ask, what are the criteria for me to go in a writ or an appeal? Sometimes, see, typically writ is only for legal matters. Okay, only for legal matters. Your 2A, 2B clerical matter generally no. But the 2A, 2B, sometimes it is so intertwined with the legal, like 2A, 2B is there, plus Rule 36(4) was there, where the legality was in question. So sometimes there is a mixed question of fact and law. What do? You go to writ, you go to appeal. Right? So there are a lot of strategic considerations. I've had clients where even for factual matters, the court entertains writ. There are for legal matters, people have to go through appellate mechanism. Both ways it is possible. But here are some on a very indicative basis. These are the points which are mentioned. Condonation of delay, if you are not getting or 6 months have expired, very, very important. Waiver of pre-deposit, financial hardship, you have to plead a genuine financial hardship. Violations of principle of natural justice, you have not been given a hearing. Show cause notice or orders are issued after time barred. Jurisdiction is not proper, all these cases. Non-consideration of basic facts. You are selling toys, he selling, you are selling machines. It happens many times. Basic facts are not appreciated. If there is a covered matter in your own name, you have to just copy and paste the judgment. They disregard it. The facts are not properly appreciated. Then those are strong cases to go in for a writ. Judicial precedents either directly binding on you or industry precedents. Non-considerations of covered matter. Very last time reply. Sometimes they will realize 2 days before show cause notice date, he will give you, tell such a 30-page show cause notice, you reply. You can't reply in 2 days. And if he doesn't give you the extension, fit cases for Article 226. Show cause, we've had this. Show cause notice issued. The date is before 30th September. It is appearing on my portal only on 7th October. After Diwali or Dussehra. Fit case for the writ. Applicability of now. These are certain things again. If GST is not applicable or there is a doubt on applicability of GST on certain transaction, like club or association services, we had that IMA judgment by Kerala High Court. Okay, mutuality concept. If you want to challenge section 16, like the Guwahati High Court judgment 2 days back, games or skill or chance, there is a major games craft judgment 20,000 crore pending before the Supreme Court. The judgment should come. These kind of cases you have. Corporate guarantee. At least 7-8 high courts have struck it down and put a stay on that matter. Then validity of Rule 9610, whether it is retrospectively cancelled or prospectively cancelled. It was cancelled last year, 8th October 2024. So whether these will be writ petition or appeal, lot of these are good cases for writ petition. Taxing exports, intermediary services. Now they will change the law, but what happens to 2017 till now? Lot of outsourcing services they start taxing as intermediary services. So these are again classic cases where there is a good chance for us to file writ petitions. Reconciliations, now these are some of the problematic areas. Reconciliation 2A, 3B, courts are less inclined generally, but vexatious searches or irrational confiscation of books of accounts, ledger, shutting down of operations, registrations, blocking my ITC ledger, multiple proceedings by different agencies, DGGI, DRT, central, state, these are all fit cases for writ. The problem is in interpretation issues. We had some issue, automobile or engineering parts, from customs excise days, and the department knows those matters are still before the Tribunal or Supreme Court. The department has done the same assessment, they are knowing, but they are taking a totally different stand. So those are the cases whether it should be writ or whether it should be replied to show cause notice. So I had one case, so they said, okay, the client said we will not go in for a writ, we will first reply to show cause notice, even though there is a good case for it, because they didn't want to miss the opportunity of replying to the show cause notice. Now, what are the time and cost considerations? I told you for appeal you have 3 plus 3, 6 months time. For writ, there is no time, but at the earliest if you file a writ, let's say within 30 or 60 days or 90 days of the receipt of the order, that is a good practice. Now, what are the other cost considerations? Legal fees in filing an appeal, chartered accountant or a lawyer, let's say 1 lakh, 2 lakh, example. Plus pre-deposit, it's not a cost, but the cost of capital, the interest cost, implicit or explicit interest cost. That is the mathematics the business owner will do. Plus the time taken in resolving the appeal tribunal, at least minimum, versus writ. Lawyer fee in writ is high, 5 lakh, 10 lakh for example, but lesser time to decide, 6 months, 12 months, 18 months, 24 months, and no pre-deposit. So really there is no clear-cut answer from a mathematics point of view. You have to do a cost-benefit analysis depending on the nature of issue, depending on the stakes and things like that. But yeah, these are real considerations to be taken into account. Forum shopping, such as I told you this case, automobile parts. Whether, even if it is a writ case, shall I go for reply to show cause notice or shall I submit a writ? Now this is again very, very important. We had one case where there was a DGGI inspection, Kolkata. All India, 20 states, there is a detailed investigation. Now, through notification, the DGGI has come out with a 280 crore order. Now, if you want to adjudicate the matter, please go and appear before Common Adjudicating Authority, which is in, let's say, Mumbai. Right? So, there is a DGGI, DGGI Kolkata. For all India inspections and a bunch of show cause notice, the matter is before the Common Adjudicator, and it is notified by the department. So, that means all the states, you don't have to go and appear in every state. A Common Adjudicating Authority is there. Now we were contemplating whether High Court writ petition, if we want to file, it should be in Bombay High Court or Kolkata bench. Both were, we are well within our rights. So the SSC, the lawyers knew, okay, that judge, that bench, now it is not on vacation, he is there. These are very tax friendly, we can go to Kolkata. Bombay, these are the judges, there is a tax bench, they take time. So all these are strategic considerations. You should know the bench. They have a specialist tax bench to adjudicate. So these are again very strategically important for us to adjudicate the matters. Type of bench and time taken. I'll take another maximum 10-15 minutes for drafting of appeals and for the benefit of the members. Drafting of appeals and pleading. With that I will conclude. Because I feel this is very important. Now if you want to start drafting the appeals, this is again if you want to bring, develop the litigation capability. Read the order very thoroughly, obviously, and be in complete control of the facts of the case, such as nature of business, GST applicability, classification, valuation. Just as an example, nature of issue should be very clear. What are you going to file? It is not just a monetary thing. Are your facts totally disregarded, or if the facts are strong, is the department, or are you strong on legal grounds? Those are the things. Basis facts, prepare point by point submission. It has to be a very systematic, structured submission. In normal, it can be free flowing. Yes, you have to use legal language, but it has to be that flow of the language in the paper book of submission has to flow. It cannot be very arbitrary. Later point first point later no. So point by point submission is very important. Supported by statutory provisions, notifications, circular, case laws, FAQs, press releases, minutes of GST Council meeting and the Law Commission reports. These are all aid to interpretations for us to plead our case legally before the tribunal. Be precise, to the point, don't be very verbose. Nobody has the time to be lengthy submissions unless and until really warranted. We had one, the Safari Retreat Supreme Court case I read. After years I read the entire Supreme Court case law. I mean, he went, probably warranted. They went into Anand Theatre and income tax, pre-2002, what was the amendment, and they just went on a global trip, and then they came to the conclusion that ITC should be allowed on construction items. Be precise, to the point, avoid language. Page numbering, para numbering is extremely important. See, when you are in the tribunal, you are an officer to the court. Just by shouting on submissions, it's not. It is how commanding you are over the paper book of submission, annexation number, page number. It is your duty towards the bench to take him through your facts, legal submissions, and get a relief from it. That is why you are there. So para numbering, page numbering, cross-reference, annexation numbering is very important. Many times now, this is again very important. The appeal will come later. The show cause notice is really the foundation of any legal proceeding tomorrow. Even when you are in tribunal and high court, I think most of the submissions are taken at the show cause notice stage, unless some new facts or new case laws come. But I think your reply to show cause notice really is the ground floor of your very tall building. So not only the actual appeal drafting, when you are replying to any show cause notice, that it's there itself, your facts and legal provisions should be very clear. In tribunal, it should not be looked as an afterthought that you are bringing in new facts, new evidence, case laws which were not there, which were there earlier, but which now you are bringing. So if you ask me, the entire litigation practice starts from reply to notices and not from reply to the appeals. Not from reply to the appeals, or not from filing the appeals. Understand the case history right from inception till date. We've had these cases, automobile companies, stand taken in earlier proceedings, stand taken because see the classification is similar. In customs excise, it has come to the GST. There is no tariff act, there is notification, it is a cut and paste of the customs tariff. So if you are a large company, you have taken some stand in excise and customs, those matters may have been resolved or in litigation. What stand you have taken? Chapter 84, 85 for example, it is parts of automobile or specific parts, you have to decide. You can't take a contrary stand unless your business has changed. Very important these are. Stand taken by the group companies, stand taken by others in the industry, your distributors, your vendors, your customers, your competitors. What is the stand industry? So many clients have asked me, what are other people doing? I may not know his competitor, but I have to find out if I want to win that work. Very important. Stand taken in erstwhile laws. Intermediary services, it is a cut and paste of the definition from service tax from 1/7/2012 till now. Same stand if you have taken, there is a good chance you will win. Any favorable or negative outcome in previous appeals order. I had a case recently, I was just given that file because that is a 15-year-old matter, sir. That time the entire team was, I said, boss, do you have any order? They said, we don't know. So I went to the tribunal site, I went into the case history, I pulled out one order just for the period, just immediately for the period after the appeal which I was fighting. Similar facts, But on different grounds the appeal they contested the matter, which means my case became more strong. Means if they are telling me to follow certain procedures, then they have not even raised that issue. So that I proactively did. I found out, then I went to the registry, I said, sir, this is the appeal number in this SSC case, can you give me a copy of the order? Because the client's team, nobody knew, it is a 15-year-old case. See, all these things are very, very important if you want to get the order in your favor, and then that client will be for yours forever. So this is the level of due diligence. Counter facts if incorrect. Counter the facts if it is incorrect as per order in original or order in appeal. So every point which is alleged by the department, see when you are before the bench, every clause, every point will matter. Don't leave any allegation or any fact which is done by the department unanswered. You can either agree or disagree. Very, very important. Don't use short forms, define them and then use it as a short form later. Technical points to be checked such as jurisdiction. So these are all now first thing when you get any order, appealable order or order in appeal or order in original or show cause notice, check whether the jurisdiction is correct, whether it is time barred or no, whether the order is beyond the show cause notice. Again, the tribunal case which I am fighting, apart from the legalities, they have not followed binding precedents. The order itself is beyond show cause notice. The points raised in show cause notice. Show cause notice, they just asked me some details. Order is totally on different grounds. Very, very important. Many times these things happen. First appellate authority could have denied relief, raised demand on a new point which is not mentioned in order in original. So there is an order in original. First commissioner appeals, he tell, okay, these two things are not there, I will not allow you. Very, very important. So means while drafting your facts, use of legal language, legal maxims, specific arguments for interest, penalty, suppression matters. Very, very important. Lot of the times section 73, instead of that you are given 74 where the penalty is double, means equal to the tax. So you have to have, apart from your tax points, specific arguments and case laws on interest, penalty, mens rea and suppression matters. Clearly mention the relief which you want. Quickly some code habits, last 2 slides, 1 by 2 and then I finish. So counsel is the officer of the court. It is before your duty to the client, your duty is before the bench. Because the face value, the first impression, the credibility before the bench is of paramount importance to any counsel appearing before the bench. Court ethics. I've seen some movies recently where the advocates are coming through the window. I frankly myself didn't like. And they've given a beautiful disclaimer before the starting of the movie that we don't mean to insult the courts. I didn't agree with that. So court ethics are don't enter the court through the window, please. Court ethics, protocols, please come before the bench comes. I have a habit, half an hour before the court starts, I go in the mornings. Protocols, respect to the bench and the DR equally. Please address the bench as your lordship, to the department or DR, departmental representative, learned counsel or my friend. Argue based on facts to the point, correct rendition of the facts, very, very crucial. There itself, you win half of the case. Have complete control over the paper book of submission. Not the good counsel, as I said, is not who shouts loud in the court, who has complete control over the paper book. You have to take him page by page if you want the relief. That is the mastery. Paper book of submission and annexures. Only once full facts are rendered, supported with technical points, then case laws. Not people are in a hurry. Sometimes may not case law, TCS, safari retreat. No. You should have a fact supported with legal points. Case law should be only coming towards the end. It just fortifies your case further. It cannot be a substitute for detailed, lengthy legal arguments. Very, very important. Be aware of unfavorable case laws. Hear the bench and DR patiently. While there will be times where half of an hour you have to just listen to them. Trust and credibility is very important. Address and differ with the bench and DR in a very respectful and diplomatic way. Know which points to cede. 50,000 points, leave it. I am looking at a 20 lakh relief. Very, very important. You should know, gauge the room, to gauge the mood of the bench, the room. Leave it. You have the bigger thing to attack always. Just always remember that. One should be extremely sharp in gauging the mood of the bench. Sound temperament irrespective of the provocation. Very, very important. If there is a hostile by the DR, respectfully raise it before the bench. In a nice way. We don't have to show our emotions at all. Always conclude with a prayer, with the relief, including the interest sought for. A very, very important thing, lot of times, the bench will remand the matter back. C-Stat has the powers, or G-Stat will have the power to remand, unlike the first appeals. What happens is when they remand, the department starts the assessment once again. So we have to plead before the bench that it should not be a de novo adjudication. Or if it is a fresh decision, it should be completed in a time-bound manner. I went for a case for tribunal. First 2 hearings they gave me Feb-March date. I said, and the client didn't tell me. I said, my lord, my refund is stuck for 15 years. Can I get the earliest date? He gave me the date after 2 weeks. So you have to think on your feet here. These are some of the points. Thank you very much. Happy to address any queries if you have.
So you told one thing about the German case. What happened to that?
So what we understood, and one important thing, good thing you asked me. What I am seeing is I was partner in one of the big 4 firms. Despite the brand, let me tell you what I have seen the GST assessments last 5 years. We do the compliance advisory. The moment any little bit large show cause notice comes, they straight away go to a law firm. So they went to, ma'am, to answer your question, they went to a lawyer's firm. They chose the option of filing a reply to show cause notice.
You want to state additional explanation to the same point that was raised, like any additional case laws or any other provisions. Can we do that?
There are 2 things, madam. If after filing the appeal, now this particular case I am handling, this appeal was filed before the CSTAT in 2011. Now client has just given me the paper book of submissions. It is my duty as a counsel to know what were the case laws between 2011 and now. Okay, and I had the foresight that I will tell, okay, these are my appeal charges. But if there is any additional submissions, because that submission was done by somebody, client hired me only to plead the matter before the tribunal. So I said, because it is a 15-year-old submission, definitely there will be more case laws. For my legal research, if I do, this will be my fees and I will do a reasonable fees. Right? So definitely there will be case laws. So there are 2 things. One is, if there is additional case laws, you are well within your legal right. Now what if your points or case laws which were there earlier, you want to expand, you can expand, obviously. But if you have missed out any point or case law, then with the specific leave of the bench, if the bench agrees, you can put forth your point. But don't leave out any major factual or legal case law.
When notice is there and you know that officer has a malafide intention of notice and then order also passed. So in a case of appeal, what should be our base approach? We know that is totally wrong and the intention of the officer itself is very wrong.
So when you say quote unquote intention, see if the matter is big and complex, if the stakes are high, and if the order is outright arbitrary, complete lack of appreciation of facts, legal points, covered matters, settled judicial precedences, you can explore the writ option. Article 226, writ option. Because see, when you go for writ, it is not that automatically the High Court will also, there is a hearing and that you get hardly 5-10 minutes, few minutes sometimes. There is a hearing only for admitting the writ, whether it is a fit case for the courts also to spend the time to appreciate the writ later. So there you have to convince the judge. He will first of all ask, what is the cause of action? There is alternative remedy. So he will presume that you have time to go there, but why simply you are spoiling my time? So you have to have some solid 9 on 10 or 10 on 10 reasons or 10 on 10 probability to convince the judge, and that is the job of the counsel to tell, my lord, this was my case, this is a settled position. I have been manufacturing and selling my automobile parts in whatever chapter 84, 85. He's taken a completely different, instead of 18, he's put me into 28% category. So for me the stakes are high, I have no choice but to come to you. So malevolent intention can be of various spectrums. Sometimes even routine malevolent intention, but the court says no, now the courts will say, ki boss, even if he is malevolent intention, unless there is a major, like he's not given you hearing only, then I am there for you. For all interpretational issues, even if it is covered by your earlier matter, you please go to the tribunal. So because High Courts can't sit and do their jobs, which they've been doing now last 7-8 years. So it really depends case to case, but these are some of the principles I have told you.
So how to go about delaying filing of appeals? First appeal.
How to go about delay?
There is a delay in filing of appeal, first stage. How to go now?
No, there has been delay means has the appeal been accepted?
No, they have rejected the appeal.
Okay, they have rejected. Now, so you have to go ask for a condonation to the first appellate authority, and you have to come out with some genuine reasons, either financial hardship or let's say you didn't have, there was a search and seizure. There are cases where there is a search and seizure. There is a complete lockdown of the operations. The books of accounts are not there. So there you can say, okay, my complete operations had come to a standstill. I was doing business, but my records were in a mess. That too because department had taken it. Maybe those proceedings are genuine, but I was stopped from filing the appeal. Those are the genuine cases. But if you are not having anything, you say, boss, my accountant ran away and still my company was running hell and heart, then it's suppose you should have recruited your accountant. So you have to give some very logical reason why, what stopped you from preventing an appeal.
So logical.
No. There you have to be very, very sure, please. And then you have to sometimes present it, okay, see, this is my MD resigned, there was no leadership, I was just an accountant. It happens many times. People file appeal after 1 year. It happens so many times.
So he means to say about first appellate.
First appellate only. All these are applicable to first appellate tribunal.
But the thing is, in this case, what happened was date of communication. The section 169 tells communication, even in the portal is also a mode of communication. But the assessee was in the rural areas and all those things. So he was not well versed with the IT and all those things, due to which he was not aware. And when the bank was attached, it is when he came to know. So
there are cases like that.
Yeah, so he's contesting the date of communication is when my bank was attached, not when the portal was uploaded.
That time you saw the portal.
It is when I have seen communication is what serving. And
so they will ask, first of all, fine, I have sympathy with you, your bank is attached, sir. Now you saw, why didn't you see it 6 months back?
He was not aware of this one because of this problem.
So I think there, now that you said now something remote area, you will say, Milord, connectivity was not there. If you are in Bangalore, Cunningham Road office, you can't say the connectivity is not there, sorry. So again, one line or one fact, and again depending on judge to judge, I may be totally wrong. But yeah, I think it seems to be a meritorious case. Madam, sir, Milord, I'm in a remote area. I was not aware, connectivity issues, the technology awareness is not there. My bank got attached, suddenly I think the court should be sympathetic to you.
But that's what the first appellate authority says, we don't have a power to...
Now the first appellate authority will not.
Will not have
This is what I am saying, High Court, 226. No other choice. You have no other choice. Because see, he's rejected your appeal. Then where do you go? For first appellate you can't go to tribunal. No, rejection there can't go to tribunal. Tribunal will get activated only if he is passed an order. Here he has rejected your appeal. So either you forego or Article 226. But I am given to understand there are low cost options for these matters also. Means for you the cost will not be like 5 lakh or 10 lakh. If it is a simple matter, there are cost effective methods of going to Article 226. It is possible. But it has to be a genuinely hard thing, right? It cannot be due to casualness. If he senses that either by in your arguments or through your written records, you have to genuinely plead innocence, only then they will give you that relief. But it is worth trying. Your case is worth trying.
Sir, I have one issue.
Sure, sir.
Just a clarification. Sir, one case where what happened is, first appellate I got an order from the SCM states. So I went to an appeal. In first appeal, my grounds were that we have already paid the taxes, only to safeguard the interest and penalty, and we wanted to convert this 74 to 73, which the first appellant has the power to convert the same. So this was a 283 issue. So we said we have paid the taxes, but interest and penalty we have not paid. But in the first appellate authority, we have contested the tax also. Even though we have paid on the protection, we are saying we have paid on the protection, we are contesting the same. And in one of the grounds what we have brought out was that we want to appropriate this interest or tax what we have paid, provided we get a 74 to 73 order, so that the penalty gets reduced to 10%. And we can take the scheme of SPL 02R scheme also.
128 capital A. MST scheme.
Yes, 120 days scheme. So what happened is now in our grounds of appeal we have told we like to appropriate this tax what we have paid on the protester for the demand, and interest and penalty order should be converted into 73 and not under 75. There was no modified thing.
Fair enough. Lot of cases are there like that.
But now what has happened is the appellant has given didn't convert this into 73. And
first appellate authority did not convert.
Yes. So they have passed an order telling that they are appropriating the tax amount, they are demanding interest and penalty now. Now, for me to go into the SESTAT, should I keep my tax amount which we pay in the protest as still disputable, or should I pay pre-deposit of 20% on?
No, it all depends, boss. Are you still contesting the tax? First of all, forget the interest penalty.
Yes.
Are you still contesting the tax? Or after the first appellate, you are saying, okay, by and large, I am okay with the tax. That you only have to tell, because GST is 100% of admitted liability. Are you admitting your liability? If you are contesting, not which, so I will tell you, there are case laws in Karnataka. I wrote less than 1 month back in Jetronic Solutions. If I have paid tax under protest, even that can be adjusted towards my pre-deposit. I am just giving you one analogy. So are you contesting the tax also? Still?
Yes. So I am planning to contest the tax. If my order gets under 73, then I will appropriate my tax
No, if is gone, that 74 has not become 73, is finalized. Now tribunal, you cannot ask, if you become 74 to 73, then only no. So the only question which you have to evaluate, are you admitting the tax? From what I understand, I don't think so. I think you still want to contest the tax also. So you will contest tax, interest and penalty. You will say, okay, penalty I don't want. Worst case scenario, put me in penalty in 73 or general penalty provision. Certainly not 74, because mens rea, intention, there are 10,000 case laws. Right? So you are pleading tax, interest and penalty. So the pre-deposit will be 10% of tax.
And since I have paid my tax entirely, so there will be no pre-deposit.
Yeah, absolutely.
That's the reason.
That is allowed. See, that is allowed. There again you can choose to knock the High Court door if the matter is totally arbitrary instead of going to the tribunal. Those are the things which you need to evaluate.
So, because the reason is, if I admit the tax now, okay, yes, whatever they have told.
Don't admit it.
Then I have to pay 20% as pre-deposit additional.
Correct.
So for penalty case, means because interest and penalty will be the outstanding.
Now there is a grey area. If you are admitting tax, but if you are contesting both interest plus penalty, the law is silent. For interest only, you no pre-deposit. For penalty only penalty if you are contesting, there is a 10% pre-deposit now with effect from 1st October 25. What happens to interest and penalty? There are no provisions. There is no provisions. At least I have not seen it. That appears to be a grey area. So there is a likelihood maybe you may have to pay a 10% pre-deposit.
Just check, sir.
Yeah.
Have to pay.
So if you contest the tax, adjust that against this. So I think that should be a smart move. Or you can also, if it is very arbitrary, you can consider Article 226. But it's a very interesting case. Thank you very much. I am happy to take your questions offline. I think it's already 8:30. I think we will take it offline. Krishnamurthy sir, you would like to add anything, sir? Thank you.
Members, a big round of applause for that fantastic presentation on the topic by CA Madhur sir, reiterating the importance of GST practice for members. Thank you CA Madhur sir for your time and efforts. On behalf of members present here and all the managing committee members of Bangalore branch of SCI, we would like to hand over a memento to speaker as a token of gratitude and respect. May I call upon CA Krishnamurthy sir, senior member, to come on to desk and then do the honors. Thank you so much, sir. Thank you, members. Good night.